I got. I gotta turn that off. Gonna be reading for a minute, and then we're gonna hop in the charts. Like nice relaxing. Getting that mind state before the tape reading session today. We had a big gap lower, so we have a big new day opening gap here, and it looks like draw liquidity is this low, in my opinion. It's a big gap lower. After taking buy side, that order block was failing like 7 times. That's not an order block. So then we get a gap lower, our value gap, and gets respected, and then we seek this new week opening gap that we're within. little reading session right there. I'm reading the 4 agreements right now. I just started it yesterday. It's pretty solid. Pretty solid, I would say. Whoa. Got about an hour and a half till market opens. I was listening to this earlier.
That everybody else is brought into it. It's mental baggage. And social media
I'm gonna
brings
grab some
more of that.
breakfast too.
Trying to stand out, trying to make you got to defend my mentor. I got to make myself look profitable. I got to be able to keep up with the people that are renting cars. Like all this stuff, it's all bullshit. And if I did not stomp on the throat of Cameron to tell him that that's not the right way of doing it now, that's the direction he would go. Because you know what started all this stuff is he wants to go out there and troll the trolls. And I told him, I said, you're already doing it wrong. You can do that, but that can't be the reason why you're doing it. That can't be the reason why. Because if that's the reason why, you're going to rush. You're going to rush to do something that is not needed. It's not needed. You need to develop a skill set because once I move on, if you want to live beyond where you live like now, you want to be able to earn a lot of money. This skill set can do that for you. But you have to grow over time. And you have to figure out what you think as a human being, what greed's going to feel like when you start feeling it, when you are profitable, when you're consistently profitable. That doesn't mean no losses. It means you close the week, you close the month, you're in gain, you're in profit. It doesn't have to be a lot. You're just not losing. There's nothing wrong with that. And I told him today, I said, I want you to see what it feels like to be at break even majority of the day. So when he wasn't getting it correct, I'd say, okay, buy here. And as soon as it gets above that level right there, I want you to close it. Do not use a limit order. I want you to feel it. I want you to feel it while you're in it. And as soon as I tell you go, you buy it. And when it gets to that level, you sell it. Sometimes he would sell it before it got to the level. I said, why'd you do that? Because I was afraid. Why did you not listen to me? You're not listening. 30 years of experience against yours. If you're not going to listen, you're not going to learn. And other times, he'd hold past the level and it would pull back on a little bit. I said, okay, see what you did there? You had the right amount of gain, but you held on too long. Why'd you do that? Because I thought I was going to keep going. I didn't tell you to do that. And he would get frustrated and start getting antsy. I said, what are you feeling right now? I'm done. I'm done, Dad. I'm done. I said, no, you're not. This is exactly where you need to be at. This is where you will do what you did by failing at this multiple combines. That frustration, that feeling of, I need to do something to replace this feeling. That's where it all comes from. Everybody that ever blows an account is in that state of mind. And if they don't start there, when they're in the trade that they know damn well has gone tits up and ain't going to pay out, they know they should get out and they don't. And then they're in that moment. They're in that mindset then. But they can't bring themselves to get out of the trade and close it. And I put him in those today. Lots of executions, lots of them. And we hung around break even. And I told him, I said, what's it feel like? He goes, well, we were up a lot. We were down a lot. And I said, what's a lot? A couple $100 here, a couple $100 there. I said, see, you're saying a lot because that's in relationship to what you earn on a weekly payroll. But the most you lost and was down was like $500. And you only went down there one time. But every time you went up, you'd come back down a little bit. And every time you go back up, you make a new equity high. And you come right back down the middle, hang around, break even, go back down, break even, go up a little bit more. And I said, now think about what you're doing. All these transactions, do you want your trading to be this many trades? Because there's a lot of people out on social media that will show you at the end of the day, this is what I made. Look what I was able to profit today. But they don't show you the 50 transactions they took. There's nothing wrong with working your ass off to get out of something. If you're really gung-ho about trying to make a profit on the day, sometimes you're going to get into a market environment where you have to work a lot to get it to come out. Or if you go into draw and you do it wrong, you're human, you do it incorrectly, and you go into a losing trade. And then you try to get it back into another losing trade. You have to stop. Or know that you can come out of it. And that's why I tell them 1.5% is your maximum. Because that 1.5%, you should now know you've made $544 today. Think about that now. If you can make that, that means you can risk that. You got to be able to go out there and find, like algorithm and high frequency trading developers, they go out there and they look for a trade. It may be $100, may not be $250. But what they're doing is they're looking for something that they specialize in, that algorithm will go in and monetize a fluctuation based on this repeating phenomenon that happens all day long. And that same little tiny little piece, one little bite of price action throughout the day, done hundreds of times, thousands of transactions a day. They're pulling out money that you can't even fathom because they're taking something with a cookie cutter approach, something that they can repeat over and over and over again. Every single one of the PD arrays that I've taught you are just like that. That's what high frequency trading algorithms that people have learned from me, they have used these things now. They can go out and find them any time frame. That's why I went down into the sub 1 minute chart to tell you that this stuff is in there all day long. All day long. Oh, it's just a shitty market. It's not moving around. It's in chop. We're in some real chop. The chop's real, man. The chop's real. No. Slicing and dicing on a sub 1 minute chart. There's still breakers in all that chop. There's still institutional order flows in all that chop on a sub 1 minute chart. You have to know where it's going to go. Even in a small little choppy range, if you want to call it that, you can anticipate what pool of liquidity is going to go in that 1 hour. I can trade in an individual 60-minute range and beat everybody's asses on social media. And I said that, yes. That's not arrogance, that's just the facts. Because I understand what price is going to do. I understand how I can mess it up, and I can wait for those perfect instances where everything makes perfect sense to engage right then and there. And I know the times that hurt me. I know when it could look like there's an opportunity and it's really not there. Experience is going to dictate that. And I taught him today that there's going to be a lot of lessons that you're going to learn that are not going to be in my video. They're not going to be in our discussions. It's going to be what you have discovered about yourself. And you're going to find that you're going to excel in certain instances. Something just really revs you up. You see this opportunity. It makes so much sense to you. And you're not demanding it pays more than it would any other time. It's just a profitable opportunity. And you may not have the equity to do 100 contracts at a time when you start doing it. Start with one and you build up. And when you make enough equity to be able to do 2 comfortably and not go over 1.5% risk, then and only then do you do it. But every single trade that you make and put on, it's never to be taken where you can't at least get that same trade paid out to you at least 2 or 3 times in the same day. And I'll say that again in layman's terms for the folks that don't really understand or appreciate what this said. 1.5% of your equity. If you can't find a trade 2 or 3 times intraday with that yield on individual basis, 2 or 3 times, you have no business taking that risk on. Think about it. Because what you're doing is you're demanding that you find a needle in a haystack. In your limited understanding of the marketplace, in your limited experience doing it, in the most difficult market conditions I have ever been in, you're going to be the person that can just go out there and walk out there and do that. I'm sorry, but you won't. You won't be. So don't put yourself through it and discourage yourself through failure. Make allowances for yourself. Spend a little bit more time learning how to do it. Do it the right way, so that way you enjoy the process. It should not be a draining effort for you to want to do this. And some of you, the way you talk in your tweets, it just seems like somebody's twisting your arm, and it ain't me. If you're not having fun doing this, it's not for you, or you're grossly doing it incorrectly. Making money is the end result of you doing things, learning how to do it, and having fun having done it, but not being on an emotional high that you have to have a win all the time, or that you're chasing it like a high. And the only way you feel that or understand and appreciate it is when you lose real money. The people that lose real money know exactly what I said, and it resonates with them. But if you've only been in demo, you haven't even came to the dance yet. You're a spectator, not a speculator. And as soon as you put risk on the line, it all changes. So you have to have some measure of experience that you didn't just get last week watching the 5-minute trainer, the cliff notes of something that took 30 years to be placed in your hands now. There's a lot of things that you're going to learn about yourself, and you're going to laugh when you look back at how you thought you were ready to trade when you were not. You were not. I know I wasn't. There's no shame in admitting it. There's no shame in it. But right now, you would never do that because it sounds like you're not smart enough. That would be like admitting weakness, and that's exactly what my son's struggling with right now. See, he's at the peak of his testosterone. He's at the height of his strength, his muscularity. He's in his mind at his present age. He's at the peak. And young men, you know what it was like when you were a teenager. You thought you could jump over buildings and nobody could kick your ass. You were the best looking person in the world. Everyone wants to be with you. Unrealistic viewpoints of yourself. And see, he did damage to himself. He did damage. And he bragged to his friends. He bragged to his girlfriend that he was going to do this and he was going to do that. And he couldn't do it. Now he has that. He's wrestling with that. And now because he didn't do it successfully, like he walked out and thought he was going to be able to do it, he's doubting. And doubt in a hurt, bruised pride in a man That's dangerous. It'll make you do stupid shit. It'll make you do dumb stuff. So most of today, it was me just cleaning those wounds, reminding him that that's normal. Dad went through that. I did all that stuff. I did all that stuff and worse. And there was nobody here telling me this is how you fix it. So I was trying to find my way through it all and making it longer than it has to be. And it's painful. So when I talk to you and I make these conversations available to you, it's for your edification. It's so that you don't go through it like I did. So that way you can avoid it and appreciate that. You know what? I don't want to make those mistakes. I'm glad ICT went through it. I'm sorry he went through it, but I'm glad he went through it and he's telling me how I don't have to go through that. That's the wisdom in a student that's listening to me. Not this guy talks and he likes to hear himself talk. No, I don't give a fuck if that's how you think. Get the fuck out of here. You're not somebody that wants to learn. You're a clown. You will be broke. You will be working the rest of your fucking life. You will not be able to be profitable as a trader. So just get the fucking stepping. The people that really want to be here and make themselves a profitable student that trades and earns their own money, they want to know how they're possibly going to mess it up. And I'm not going to talk to you always in a refined manner. I'm live. I don't have a filter right now. So I'm going to feel the impulses and the emotional charge that I remember going through. It's all real stuff for me. I went through this stuff and it was painful. And it's painful to remember what it was like for me. And I know that some of you are going through it right now. And it's normal. And you can get through it. You can grow out of it. Use it like rocket fuel. It'll be the deterrent to never doing those same things again because you know what it's done to you. You don't want to relive that. You have now a reason to appreciate the rattlesnake that those circumstances provide. You know, walking into that situation again, it's like a rattlesnake's tail just shaking. You don't need to go back in there again. You know what it's like. So avoid it. Don't try to push and make money in those situations. Just relax. Take a day off. Take a session off. Don't do it. But ICT, I'm supposed to be an everyday trader. Who the hell said that? It wasn't me. So having a very, very low expectation of yourself. Yes, 5 handles is a wonderful target. Realistic target. In the beginning, if you're absolutely scared to death, if you're scared to death of taking trades and you don't want to get into a trade because you're just afraid to do it, feel what it's like to desensitize yourself to go in and execute and put a limit order on 1 handle. Put a trade on. If it runs up 1 handle, it will close the trade out, and that's 1 handle. That's $50. It's not a lot of money. And if you do this over and over and over again with a demo account, you will get over the fear of entering. Then you add 1 more handle to it. Put on an entry, reach for 2. And you'll see, even with static price action, if you know where the market's likely to go, doesn't mean you're right. This means that this is the next draw on liquidity. This is where the obvious equal highs are. This is where they haven't been all day. Let's aim in that direction. And then put a trade on and try to go for 1 handle. And do that all day long, working with a 1-minute chart. It's not about how much drawdown you have. Don't worry about that, because if you're trying to measure that, you need to get into the pushing of the button and just looking for a small transaction. That's it. Over time, by gradually working into 1 more handle, up to 5, you'll completely desensitize yourself to the outcome. It won't matter to you because you've done it so many times, you're bored by it. You don't care. But think about what you're doing with your demo account right now. Think about what you're doing with your combine challenges. You're gambling. You're literally gambling. The whole time you're doing it, you're scared. You're anxious. You're hoping and praying to get that certificate that says you're funded because you can't wait to go on social media and show it. But you're never going to show anything after that. Because chances are you probably will blow it when you get to the funded level. Nobody will see your payouts, certificates or confirmations, but you did something. You showed the world that you got funded. You passed the combine. I don't want any of my students thinking that's a success story. That's not. That's just, okay, you showed up to the dance, now dance. All these certificates, they're wonderful little hurdles for you to get across in the beginning. I'm not trying to minimize that. If you've never done it, wonderful, that's where you're going to go. But you have to have some kind of vision beyond that. What are you going to do once you are funded? Because chances are you're not really responsible. You're not organized. Unless you're thinking like I'm trying to suggest to you in my teachings and lectures and here tonight. You have to have some measure of controlling yourself and thinking about things correctly. Don't just go in and impulsively try to execute. My son, my own DNA, flesh and blood, there was no magic because he came from the fruit of my loins. Okay, there was no mystical, magical powers transferred to him. He did like anybody else would. Do the wrong shit. Well, here's your results. Impulsively try to do something he wasn't ready to do. And now he has the mental baggage from it that I told him and I tell all of you how you can avoid all that. So now he has to wrestle through all of that pride, that bruised ego, and concerned about what if he doesn't really still learn how to do it. You have no idea the impact that has on a person, especially a male. We are performance oriented, from sexuality to physical appearance to workplace, sports. We are all about measuring. It's all it is, it's measuring. And ladies don't think that way. And that's why they're better traders. So if you cause the damage in your psyche early on, you will carry that the rest of your career. You might become better at coping with it, but it never goes away. It'll always be that little limp, that little crick in your back, that little bum knee sensation you get when it rains. It'll always be there. When you do certain trades, it'll jog your memory of it. And then while you're in a trade, you'll be thinking about, man, that was a dumb trade. Is this going to be like one of those again? Are you focusing on that trade? Or are you worrying about and reliving and having a flashback moment and having a PTSD episode? As soon as you lose sight of your trade, in the beginning, not 30 years later, but in the beginning, as soon as you lose focus and you start having your attention somewhere else, close the trade. You've lost the plot. Oh, this guy just said close. You need to reward yourself for being disciplined. Discipline is not taught. You can't buy it in a course. You can't read it in a book and acquire it. You can't have a 5-minute trainer or Cliff Notes edition of anything, my stuff or anyone else's, and get discipline. It's forged through pain, struggle, and finding the outcome that is favorable that you couldn't identify or see at the time. And because over time you do these types of things, and you know what it was like to be going through it painfully, doing things that you shouldn't do, taking on more risk, taking on more contracts. Because I know what you're thinking. It's the same thing that I've talked about, and my son lived it. They will tell you that you can trade up to 15 contracts if you use a $150,000 account. Sure, sure you can do that. And you're thinking, well, it's worth the risk. It's like a lottery scratch off. It only cost whatever it was. I don't even know what they cost to get the combine started. But what happens if it works, man? It's like a big shortcut, because if I can get the funded, something magic's going to happen. I'll learn how to trade then. It sounds funny, and probably some of you are laughing at you. That's exactly what you were thinking too. As long as I got to the funded part, then I'll know what I'm going to do. I'll pick the right trades then. I'm in a hurry. I just want to get through that first stage. And these funded companies are loving that. They're making lots of money with reset fees. You can do this, but you have to change how you think. You have to lower your expectations, and that's not a bad thing. Trade with one contract. Trade with one contract. And I promise you, this is what you're going to have happen. You're going to use one contract. You're still going to trade impulsively. You're still going to get in there because you want to have something good happen. And then you're going to go into drawdown. In that one contract, you'll have 3 handles, becomes 7 handles, drawdown. Stop. You can afford to trade more because the max loss day, whatever it may be, you're not there yet. Still, stop. Can you stop? 99% of you won't. That's a problem. That is a problem. Because if you can't control yourself and say, you know what? I can stop right now and I'll come back tomorrow. Even if this does move where I thought I was going to go today, or if it moves even way beyond that, it doesn't matter because you weren't in that trade, so you can't regret it. You weren't in that trade, so you can't regret it. You have to start somewhere, forging discipline, being self-responsible, and that way you know that you can control yourself in the future and you can trust yourself, because what you're doing, and you don't realize it, you're pushing the button in these instances with a demo account or in a combine because you know that you wouldn't be losing that money. If it's wrong, that money's not coming out of your bank account. It's not coming out of your live equity. So it gives you this false sense of security. And it's also, it feels like you have all upside, no downside, but you still have to pay for a reset. And you're paying in time. You're wasting time instead of just doing it the right way. Every one of these combines, every single one of them, all of you could do it in a month. All of you could do it in a month. But all of you want to do it in the minimum time. All of you want to do it in some guy's challenge on YouTube. Do it in this amount of time. How about make $5 million after taxes? Let's talk real money. Okay, stop with the Mickey Mouse shit. All these challenges, do this and do that. No. I'm teaching you how to be the best trader that you can be. And if you want to listen to other people tell you shit, you're welcome to do that. But that combine, whatever company you're using, every single one of them are Mickey Mouse level easy. They collectively understand that you are going to do what I've been talking about in this entire Twitter space tonight. You're going to be reckless. You're going to be impatient. You want to just get through that first step, that unprofitable, unfunded challenge, that contest. Who you competing against? You. You are. You are competing with yourself. And when you blow it, who'd you lose to? You. So it doesn't make sense to figure out what the fuck you're doing wrong. And that's why I talk like this. That's why I talk about the things outside of the concept in a video. You think I'm talking about dumb shit. I saw a guy on one of the dudes that take my Twitter spaces, and it'll be in YouTube. He does it. In the comment section for some goober. If you want to make money, or if you want to have more people watch your videos, you can cut the bullshit out and just get to the trading parts. Dude, you're listening to this. You are absolutely fucking doomed. You're never going to make any money. The fact that you don't want to listen to someone that has gone through it, figured out how to fix it, and has taught other people how to do it, and they're making fortunes because they've adjusted and did these things in their own trading. There is no shortcut. There's no way around these things. Whether you are met with it right now or in the future, every single one of you will come across this bridge in the road, and either you stop trading because these things are going to be in front of you, these problems that every trader has, or you learn how to deal with it on an individual basis. Like, you are going to wrestle with things that the next person isn't, but it's all the same things. uncertainty, performance anxiety, rushing, not being organized. And the top of the list, unrealistic expectations. My son went into it thinking, I'm ICT's son. It's going to be easy to play this video game. I'm going to be able to tell my dad, this is what I did. Bada bing, bada boom, it's done. Yeah, bada bing, bada boom, you got your ass done. It's over. Now you got to fix it. But now you have it harder because you have to fix all of that negative thinking. You got to cope with that now, which makes everything exponentially harder, but not impossible, but much, much harder. And when I talk to you this way, and most of this stuff is designed for my kids, I'm telling them how to avoid all these things. And 2 of my boys now have tasted this shit. Cody thought he was going to whip crypto's ass, and it whipped his ass. I told him to stay away from it, didn't listen. Okay. He's not trying to trade. He's sour by it. Doesn't want to talk about it. Doesn't care. Okay, I get it. He wants to be the owner of his stepfather's business, and he thinks it's going to be passed on to him. I don't think that's going to happen. But he's an adult. Let him do what he wants to do. Cameron tried to do it the video game approach. All wrong. Caleb, slow and steady. Not trying to be big. Not trying to worry about getting out of his job real quick. Just real slow and steady. Real slow and steady. And he'll get there. I'm confident. I'm confident he will have all the traits that I want all of my kids and all of you as my students to have. He's not in a hurry to go in and tell his boss, I don't need to be here anymore. And because of that, he has the right mindset and it'll carry him. He has no girlfriend, no social life. It's work, study, markets. That might not be for you. Okay. I already said I'm not for everyone. The markets are not for everyone. But there is no sugar-coated, cookie-cutter approach that you're going to be able to walk out there, start making money, have no problems, no issues mentally, no baggage, no drawdown that causes you to think recklessly. There's nobody teaching this stuff. They're all trying to entice you to buy courses, buy memberships, buy products, follow me, copy me trading. You have to deal with the realities of you're going to do it wrong. What are you going to do when you do it wrong? How are you going to cope with it? How are you going to get past it? I've been there. I've been there lots of times. And I thought I had it figured out way faster than I really needed to invest more time.
Yo, what's good, Lorenzo? How you doing, bro? All right. I guess I can leave this on.
But I had to discover this stuff going through it, patching myself up, stopping the bleeding, and working extra jobs when I didn't have a whole lot of free time as it was, just to get a little bit of money to start doing it all over again and making the same mistakes, thinking that I was going to get a different result. And many of you are doing that, even with my concepts. You're trying to force something that's not in the chart. You're trying to see a breaker. You're trying to see a fair value gap, a silver bullet, because you want it to be there. You're impatient. You're not waiting for it to form. You want it to be there. So you're going to look for it. And damn it, you're going to see it. They're like ink blots. They're Rorschach. They're projecting what you want to see. And you're fooling yourself instead of understanding how to read price for real. And you can't do that quickly. I've never said that you could do it quickly. But once you understand how to read price, and you understand how to determine where the draw on liquidity is, 90 fucking days. You apply that silver bullet, you don't need a job. That is not 90 days you can quit your job. There's people out there taking my comments and making YouTube channel videos saying I'm going out there and telling everybody to quit their job in 90 days. No, you have to at least know what price is doing apart from the silver bullet. The silver bullet's just a multiplier. It's a model that lets you go in and act on what you should already understand about the marketplace. You're not doing it in 90 fucking days. Okay, you're not. You will not. Okay, so that we were understanding ourselves. But if you spent a year back testing and tape reading and you get a really good feel for what markets are doing and how they work from one liquidity to the next, look at the video I put up, One Setup for Life. I literally tell you how to go in there and use the previous session's liquidity. And for the folks that are asking me, can you teach the London session? Just look at the previous day's afternoon PM session. I don't know why you're making it hard. Like, that's what you do. That's all you do. Apply that in between the 2 o'clock and 5 o'clock in the morning. London Open Kill Zone. Whether it's Forex or futures, it doesn't fucking matter. It's the same stuff. Like, you are all complicating something I've made very simple. Because you're bringing something that you think is a mountain issue, and it's not. It's insignificant. But because of your impatience, because of the lack of discipline and self-control over yourself, you're making it something bigger. And it's the perfect excuse to say, I don't know how to do it, and it's not working for me, it's not profitable because ICT is not teaching me this and that. I've already taught it. But you don't want to put the work into it, just like my own son didn't want to. And he saw how that worked. And today he had a taste of it for real. And he's drained. Yeah, this is what it's like. It's like fucking boot camp. 6 weeks. You go in there, fluffy, full of fucking ding-dongs and bonbons, and they whip your ass in the shake in 6 weeks. You're salty as shit. You want to go out there and chew somebody's liver from their abdomen. Well, some people need to go through that. to discover that they're their biggest adversary. They're their biggest problem. And most people will be quick to point the finger outside of themselves. Oh, that guy, that gal, that thing was not profitable because this and that. No, you just didn't do what was required. You have to step into that uncomfortable area of development, just like weight training, dieting, anything worth having and maintaining is going to require effort. And you are trying to learn the highest form of financial education on the planet. Think about what you're expecting. You think that you're just going to roller skate into this shit with $500, $100 account, and all of a sudden now you're fucking rich. This is not Instagram, okay? That's all bullshit over there. It's going to take you a lot more time, a lot more effort, and a whole lot more money than you're willing to put into it. And now there's other avenues where these funding companies are making it available to you. That resource, while it's available, it might be worth it. I'm not saying you should. It might be worth it for you to do it. But you won't beat it unless you're disciplined. You won't beat it unless you're organized. You won't beat it. You won't beat that combine if you do not have the right mindset and have control over yourself and say, okay, this is all I'm doing. This is all I'm doing. So you think 10 handle runs, 20 handle runs when I'm doing them, like, man, I wish I could do that. You know what you should be doing? You should be saying, I want to be good at getting consistently 3 handles. Not even 5. Start there. If 5's too much, start with 3. Once a day. And if you can do it, then start aiming for 1.
I do want to watch Seek and Destroy profile first. Real quick.
Welcome back, folks. Just a quick little video on the market environment for your dollar, and kind of like recap on what I mentioned in the previous recording for the YouTube channel. So I mentioned on the euro we would most likely sweep that 118.50 level, and it's directly related to this high, these relative equal highs, and I said we would likely see it run those. And we got it on Thursday, today, August 27th, 2020. The economic calendar came with, obviously, the Fed Chairman, Powell, speaking in the New York session. And his comments were basically in line with allowing the current environment to remain intact. So that was met with a repricing aggressively higher and lower. Now, in the comments I've been placing on my community tab on the Integral Trader YouTube channel, I mentioned the importance of market profiles. Now, when I say that, invariably people that trade market profile, they will think that I'm referring to that, and that's not what I'm referring to. Market profiling, by my definition, is very specific, like templates, okay? How the market should pan out or deliver in price. One of the hardest ones to operate in is Seek and Destroy, as I mentioned on the community tab this week. And we are looking at that profile. Okay, so one of the things I get questioned a lot about in email from members that follow this YouTube channel and my teachings is how to know when a market environment is a seek and destroy. Because if you can learn those characteristics, those traits, then hopefully you will avoid demolishing your account and trading back and forth, trying to capture the next big move. Because that's generally what this profile will end up enticing traders to do. A big move will happen on the upside, and they'll think it's either a reversal or it's a continuation, and it's just back and forth, and it just completely grinds you down. So I don't want to speak too much about this, because obviously most of you are not going to see value in this because you probably are really new, and you want to see me point to this is a buy signal, this is a sell signal, this is a secret order block, this is a secret breaker, all those things. I think if you were versed enough, or at least seasoned with trading with live funds and have lost money, a discussion like this, even though it may be as brief as it is, will be more meaningful to you. Now, if you're a new trader or student, that idea will go right over your head, okay? Not because of a lack of intelligence, it's just because your perception and perspective on the marketplace is not yet in line with what would be closely related to someone who has engaged in real risk, okay? So one of the main focuses of my channel here is to help you avoid pain. And pain, in its pure sense in trading, is the removal of funds. When you are no longer solvent, okay, you blow your account, that's what I'm trying to help you avoid, because if you can avoid doing that, you'll stay in the game long enough to find your own method and own approach to using the things I teach, okay? So right away, you can see that we have had a market that has been range bound, okay? It's been consolidating, and when you see markets that are stuck like this, right away my mind says, okay, try not to expect a whole lot in terms of big moves higher or lower, and watch how price tends to gravitate back to the middle, okay, or equilibrium. There may be quick surges of price movement higher that fizzle out quickly, and then own method and own approach to using the things I teach, okay? So right away, you can see that we have had a market that has been range bound, okay? It's been consolidating, and when you see markets that are stuck like this, right away my mind says, okay, try not to expect a whole lot in terms of big moves higher or lower, and watch how price tends to gravitate back to the middle, okay, or equilibrium. There may be quick surges of price movement higher that fizzle out quickly, and then it pulls back to the middle. And then there'll be moves that drop down quickly. It fizzles out, comes right back to the middle of the range as well. So if you look at how the market has just moved back and forth all week until today, Thursday, we had this event here, which is what I was suggesting we would run the 118.50 buy side liquidity. And if you watch the video I put on prior to this one, you'll actually hear me say that that's what we were doing. And I covered the difference between Wyckoff and IPTA, interbank price delivery algorithm. And when you look at price action like this, it's not hard to understand how it's being controlled and it's manipulated. So if you look at the annotations I'm going to put here, it's really simple stuff. Looking at Monday's high here, and then Wednesday's low, and all the buy side liquidity that would be resting above these levels here, that's what I took your attention to. I said that we would look for this event here. Now this was a lot more than I personally expected. So I didn't expect this much of a run up just today. I didn't expect that. So I'm not going to sit here and tell you, yeah, I saw this coming. I traded it. I didn't have any participation in any all that. So I didn't see it coming. I wasn't able to capitalize on any of it. And the fact that we have Jackson Hole today, and if you don't know what that is, it's basically when all the folks come together to help formulate the next agenda. I'll just say it that way. And they have a lot of influence in the marketplace, and the things that they talk about, the things that they're planning, sometimes they get leaked, sometimes they don't. And again, without trying to sound too tinfoil hat, just know that it can create volatility in the marketplace. Now, introduce that also with the Fed chair speaking today during a New York session, and we got this here. Okay, now this is still an optimal trade entry here, and a run above the 1850 level that I hinted at that you should be focusing on this week. It expanded, went 51 pips beyond that, quickly reversed and traded all the way back down and took out Wednesday's low. So that was the intra week, the lowest low of the week. It took that out, and now we went right back to the middle of the range. Okay, so if you don't know what a seek and destroy market profile is, that's what it looks like right here. This is what it looks like. So in your own journals, in your own note taking, you want to print this out, not necessarily my chart, but you want to do it on your own platform, and then save those charts, and then study how prices move back and forth, but generally back into consolidation. So now what does it mean? What do you do with this information? Well, this is why I sit on my hands and I try not to engage the marketplace. And as I mentioned on my community tab on the YouTube channel, I put levels on and I watch to see if they get checked. Okay, now when a level is checked, I want to see how it trades after it hits it. Obviously, the 118.50 level, we breached it and then quickly gave up the ghost and went right back down below Wednesday's low. So this liquidity was also taken as well. So think about what's happened here. We've consolidated the entire week. Then Powell comes out, gives us a jawboning. Markets react with a run here, and then collapses, and then right back to the middle. So what are we left with? Right now, uncertainty. Okay, there's no clear indication, at least for me. Okay, so I'm kind of like showing you my hand, and I've already elaborated on it in the community tab in my posts. But when you see a market environment like this, or at least I see it like this, I'm not in a hurry to take a trade because we haven't had really any displacement. We've had a run on liquidity, both sides, and we're back in the middle. There is no clear, discernible direction as of right now at this moment. Now, there are things that could lead to a directional bias unfolding over the coming days and weeks. But as for right now, gun to my head, I have to fold my hands and say there's nothing I can do here. There's nothing. There's absolutely no trade here for me personally that I would feel comfortable assuming the risk on. So as I was building up into this discussion, we were looking at market profiles for a point of discussion on the community tab on the YouTube channel. And you can see the effects of it here. Okay, so again, in summary, when we see market environments that are consolidating, okay, now this is spread out over the entire week. So this would be a seek and destroy market profile for a weekly profile. And it can exist in intraday, where we have market environments that have consolidations, and then it has a whipsaw effect, and then it goes right back to the middle of the range. So we don't want to operate or engage the market when it's like this. We want to wait for the large funds to start building in positions and allow the central bank to provide the liquidity for that. And then these larger moves, when they start and they become very clear in the charts, then it's easy to ride the coattails. But until we get those very clear indications in price action, we are sitting on our hands. And there's absolutely no shame in that. There's no fear of missing a move, and we're not feeling impulsive to chase any little minor reaction, if you will, in price. And we're not believing that we can forecast the next big price move higher or lower when it's in this environment. We let the professionals at the central bank level and the large funds do their dance together, okay? Whatever the large funds start building in terms of the next position, the central banks will facilitate that and allow the liquidity for them to do so. Right now, it's not clear as to what that is yet. And when it starts to develop, it'll be clear, it'll be obvious. We will leave the range that was created today, moving below this low or above this high in a decisive manner. And then we can watch price for the next month to 3 months in terms of what the next directional bias would be. As of right now, if you were trading euro, or really majority of the pairs right now, you are gambling. You're absolutely gambling because there's no clear discernible direction for any of them at the moment. We could be in transition where there could be a longer term trend change, which I try not to forecast and try to pick bottoms and tops. I don't try to do that. Or we could just be in a long pause that continues higher for euro and lower for dollar. So because of that 50-50 nature, I don't trade with 50-50 gearing. I don't like to see those types of setups. I want to know what the bank is most likely going to reprice to, higher or lower. And if it's not one-sided, then I'm not engaging. Now, I can share my ideas and comments and suggestions about what might take place, but that's not the same as putting down money in a trade and saying, I'm going to assume risk on that. So regardless of where you are in your journey as a trader, it's important to understand topics like this because it gives you the confidence and the patience that's required to sit still and not feel the impulse to go into the marketplace and trade, because there's not always a time to be doing something, okay? Many times you're going to be doing nothing. And knowing when not to do anything is wisdom. And when you have that wisdom, it allows you to operate objectively in the marketplace, and you don't feel the effects of fear and greed or fear of missing out on anything. And if you can conquer that, regardless of where you are in your development, that's one of the major hurdles in consistency. Is if you can cross that and understand why you're not looking to take a trade, why are you willing to sit on the sidelines and not even care too much about what the price is doing? Because eventually there's going to be some excitement coming in the marketplace, and it'll be more meaningful than what we see here. Okay. So I just want to kind of comment on it a little bit and bring to light a little bit more to what I was saying in the community tab. And hopefully now you can see with a chart in front of us what seek and destroy looks like. It's a lot of volatility that goes right to liquidity and then back to the middle. And while that is, in theory, tradable, see with a chart in front of us what seek and destroy looks like. It's a lot of volatility that goes right to liquidity and then back to the middle. And while that is, in theory, tradable, it has to be done so in a nimble fashion, and most traders aren't that nimble. So hopefully you got something out of this. I know it's not an exciting topic, but it's one that is necessary for you to have longevity in this industry. So until I talk to you next time, I wish you good luck and good trading.
You've got this right here, right now. You're standing at the edge of something incredible. Your life is about to change, and it all starts with one simple truth. You can do this. Think about it for a moment. Every single person who's ever achieved greatness started exactly where you are right now. They had dreams just like you. They faced challenges just like you. And they had moments of doubt just like you might be experiencing right now. But here's the key difference. They chose to believe in themselves, and that made all the difference. So let's talk about belief. It's not just some fluffy concept or a nice idea. Belief is a force. It's the spark that ignites change in your brain, in your body, and in your life. When you truly believe you can do something, you set off a chain reaction in your mind and body.
The guy's insane. Dr. Joe Dispenza. Absolute beast. Alright. Dang, bro. Another. Are we gonna have the same weekly profile pretty much? Tuesday high a week. Oh, didn't we have 8:30 news? I think we did. $9:45 news today. Notice how we're starting to displace away from new week opening gap and new day opening gap. So I think we could likely be in a just a trend day today. Wow. Notice how dollar's displacing too. Dollar hit the IRL. Hit the draw. IRL. I want to look at this order block. But I don't think this is not an order block. This is not an order block, in my opinion. But I'll still mark the level. I feel like if this gets traded through, it's confirmation that dollar wants to go lower. But I want to see how it trades when it gets to that level. Because we've already touched it once, twice. And if we touch that a third time, that's just not at, I mean, like, we can still displace off of it, but I think it's less likely to happen. Nice trend day. No, we'll see. We'll see. Shoot, bro, my headphones almost dead. Okay. I want to do some analysis and then we'll just tape read. All right, so we look at dollar. Dollar's traded into that daily IRL. So this fair value gap. And we've taken buy side. Buy side's been taken, excuse me, sorry, once, twice, 3 times. Then we've seen displacement. What's the euro? We've hit these 2 down close candles. so we don't have any SMT. I don't want to put too much analysis on this. It's just good. It's good to see, you know. We've had change in state of delivery. Change in state of delivery here. Taking sell side. Bullish order flow on GU. With dollar being bearish. And dollar looks like we want to seek sell side. But we could have some retracement in dollar. NASDAQ. Splicing lower, we've just taken the sell side here. So it looks like we're for sure, well, we're definitely in a sell model here. The next draw on liquidity for me is these down close candles, to be honest. That's where my draw on liquidity is. Let's look at ES over here. Sometimes my charts just get way too messy for me. Okay, so we've taken buy side. Obviously. We have a 3 drive here. Big gap lower, and now ES is just drawn into, or is about to draw into sell side. So therefore ES is about to take sell side. And draw into a 4-hour fair value gap. Daily, these 3 down close candles. I'm gonna mark this low of this imbalance. We're well below true day open. I would favor more longs, honestly. That's just my nature. I know that it's over time taking longs below true day open will serve better setups. But here, like, we're already in a trending environment. We have displaced away from new week, or ES is actually just within that new week opening gap. I need to see what we do. But yeah, we're in a deep discount. So if we at market open, if we just instantly break away, then we're likely in a trending profile today for the whole day. But if we maybe start to trend away, or we try to draw back up into that range, we do have these kind of equal highs. We had SMT at those highs. And then we reclaim this. With that volume imbalance. See, I need to get better at anticipating retracements and looking for retracements. Like, I can have a good bias, but it's in like a good sense of where we want to draw to, but it's just like that patience factor of waiting for that retracement and expecting it to happen. I'm gonna get my stuff set up. Overall on ES, if we get like a Judas swing into a 15-minute imbalance, there could be opportunity there. So we have a breaker. We have a breaker that also aligns with that 15-minute fair value gap on ES. So I think opportunity could be on ES because we still have yet to hit sell side on ES. I mean, I don't really got much analysis to do here. This music's so relaxing. We'll
that
listen to
literally
some.
transforms you from the inside out. Here's the thing. Your brain doesn't know the difference between what's happening in your outer world and what's happening in your inner world. When you start to believe in yourself, when you start to visualize your success, your brain begins to wire new neural pathways. It's like you're creating a roadmap for success before you've even taken the first step. But it's not just about your brain. Your body gets in on the act too. When you believe in yourself, when you feel the excitement of possibility, your body releases chemicals that make you feel good. Dopamine, serotonin, oxytocin, these aren't just words. They're the physical manifestation of your belief, flooding your system and changing your state. Now, I know what some of you might be thinking. That sounds great, but I've tried to believe before and nothing changed. Well, let me ask you this. Did you really believe or did you just hope? There's a big difference. Hope is passive. Belief is active. Belief demands action. So how do we move from hope to belief? It starts with a decision. Right now, in this moment, you can decide to believe in yourself. It's a choice, and it's one that only you can make. No one else can believe for you. This is your moment, your chance to step into your power. Once you make that decision, it's time to back it up with action. Belief without action is just wishful thinking. But when you combine unwavering belief with consistent action, that's when the magic happens. That's when you start to see real change in your life. Let's talk about that change for a moment. When you start to believe in yourself, when you start taking action towards your goals, you're going to face resistance. It might come from the outside world, from people who don't understand your vision. But more often than not, it's going to come from within. Your old habits, your old ways of thinking, they're going to fight back, and that's okay. In fact, it's a good sign. It means you're pushing yourself out of your comfort zone. Remember, growth happens outside of your comfort zone. If you're not feeling a little uncomfortable, you're not growing. So embrace that discomfort, welcome it. It's a sign that you're on the right track. Now, let's talk about consistency. Believing in yourself isn't a one-time event. It's not something you do once and then forget about. It's a daily practice. Every morning when you wake up, you have a choice. You can choose to believe in yourself, to focus on your goals, to take action towards your dreams. Or you can fall back into old patterns, old doubts, old limitations. The choice is yours. The more you choose belief, the easier it becomes. It's like building a muscle. The more you work it, the stronger it gets. And as your belief grows stronger, so does your ability to create change in your life. Think about it this way. Every thought you have, every belief you hold is creating your future. Your thoughts are like blueprints for your reality. So if you're constantly thinking thoughts of doubt, of limitation, of I can't guess what kind of future you're creating. But if you flip that script, if you start thinking thoughts of possibility, of I can, of unlimited potential, you start to create a very different future. This isn't just feel-good talk. This is science. We now know that our thoughts, our beliefs, our emotions, they all have a physical impact on our bodies. They change our brain chemistry, our hormonal balance, even our gene expression. In other words, what you think and believe literally shapes your physical reality. So let's talk about shaping that reality. It starts with getting clear on what you want. What's your vision for your life? What are your goals? What kind of person do you want to become? Get specific. The clearer your vision, the more real it becomes in your mind, and the easier it is for your brain to start creating pathways to make it happen. Once you have that vision, it's time to start living it. Not someday in the future, but right now. Act as if you've already achieved your goals. Feel the emotions you'd feel if you were already living that life. This isn't pretending or faking it. This is aligning your mind and body with your future reality. When you do this, something amazing happens. You start to attract opportunities that align with your vision. You start to notice things you might have missed before. It's like you've tuned your brain to a new frequency, and suddenly you're picking up signals that were always there, but you couldn't perceive before. But here's the key. You have to be ready to act on those opportunities when they show up. This is where many people fall short. They do the inner work, they set their intentions, but when opportunity knocks, they hesitate. They let doubt creep in, they talk themselves out of taking action. Don't let that be you. When opportunity presents itself, be ready to jump. Be ready to say yes. Be ready to step into the unknown, because that's where the magic happens. That's where you start to see real change in your life. Now, I'm not saying it's always going to be easy. There will be challenges. There will be setbacks. There will be times when you feel like giving up, and that's okay. That's part of the process. In fact, those challenges are essential for your growth. Think about it. If everything came easily, if you never faced any obstacles, how would you grow? How would you develop resilience? How would you become the person you need to be to achieve your goals? Those challenges are shaping you, molding you, preparing you for the success that's coming your way. So when you face those challenges, don't shy away from them. Don't see them as signs that you're on the wrong path. See them as opportunities to grow stronger, to become more resilient, to develop new skills and abilities. And here's a powerful truth. You already have everything you need to overcome those challenges. You have untapped potential within you just waiting to be unleashed. You have strengths you haven't even discovered yet. You have abilities that will surprise and amaze you when you give yourself the chance to use them. So how do you tap into that potential? It starts with belief in yourself, belief in your ability to learn, to grow, to overcome any obstacle in your path. When you believe in yourself, you give yourself permission to try new things, to take risks, to step outside of your comfort zone. And that's where the real growth happens. That's where you start to discover what you're truly capable of. That's where you start to become the person you're meant to be. Now let's talk about fear for a moment. Because if you're pushing yourself, if you're stretching beyond your current limits, you're going to feel fear. And that's okay. Fear is a natural part of the growth process. In fact, if you're not feeling any fear, you're probably not pushing yourself hard enough. Just the thing about fear, it's just a feeling. It's not a fact. It's not a prediction of the future. It's just your body's way of telling you that you're doing something new, something unfamiliar. And you can choose how you respond to that feeling. You can let fear hold you back. Keep you small, keep you stuck in your comfort zone, or you can use fear as fuel. You can see it as a sign that you're growing, that you're pushing your boundaries, that you're on the right track. When you feel fear, take a moment to acknowledge it, thank it for trying to keep you safe, and then remind yourself that you're capable of handling whatever comes your way. Remind yourself of all the times in the past when you faced challenges and overcome them. Remind yourself that on the other side of fear is growth, is achievement, is the life you dream of living. And then take action, even if it's just a small step, even if you're shaking with fear. Take that step, because each time you act in the face of fear, you grow stronger, you build confidence, you prove to yourself that you're capable of more than you thought possible. Now, let's talk about persistence, because believing in yourself, taking action, facing your fears, these aren't one-time events. They're daily practices, and there will be days when it's hard. There will be days when you don't feel like doing the work, when you'd rather stay in bed, when you'd rather give up on your dreams and settle for a life of mediocrity. Those are the days that matter most. Those are the days that separate the achievers from the dreamers. Because success isn't about what you do when you feel motivated. It's about what you do when you don't feel like doing anything at all. Down those days, remember why you started. Remember the vision you have for your life. Remember the person you're becoming, and then do the work anyway. Take action anyway. Believe in yourself anyway. Because success is not a destination. It's not something you achieve once and then you're done. Success is a way of living. It's a daily commitment to growth, to learning, to becoming the best version of yourself. And the beautiful thing is, as you commit to this way of living, as you consistently choose belief over doubt, action over inaction, growth over comfort, you start to change, not just in your outer world, but in your inner world too. You start to see yourself differently. You start to recognize your own strength, your own resilience, your own potential. You start to trust yourself more. You start to believe in yourself more deeply. And as that change happens, your outer world starts to shift too. Opportunities start to appear. Doors start to open. People start to notice the change in you and respond differently. It's like the universe is conspiring to help you achieve your goals. But here's the keep going. You have to stay committed to your vision even when you can't see the results yet. You have to trust the process even when it feels like nothing is happening. Because change doesn't always happen in a straight line. Sometimes you'll take 2 steps forward and 1 step back. Sometimes you'll feel like you're spinning your wheels. But if you stay committed, if you keep believing, if you keep taking action, you will make progress. And that progress will compound over time. Think about it like this. Every action you take, every choice you make is like planting a seed. You might not see the results right away, but under the surface, things are happening, roots are growing. And if you keep nurturing those seeds, if you keep believing, if you keep taking action, eventually they'll break through the surface. And when they do, it might seem like overnight success to others. But you'll know the truth. You'll know about all the work you put in when no one was watching. So keep planting those seeds, keep nurturing them, keep believing in the harvest that's coming, because it is coming. Your success is inevitable if you stay committed to the process. Now let's talk about your environment for a moment, because your beliefs, your actions, your growth, they don't happen in a vacuum. They're influenced by the world around you, by the people you spend time with, the information you consume, the habits you cultivate. So take a look at your environment. Is it supporting your growth? Is it feeding your belief in yourself, or is it holding you back? Are there people in your life who doubt you, who try to keep you small? Are there habits that are draining your energy, distracting you from your goals? So it's time to make some changes. Surround yourself with people who believe in you, who support your dreams, who push you to be your best self. Fill your mind with information that inspires you, that teaches you, that helps you grow. Develop habits that energize you, that move you closer to your goals. Remember, you are the average of the 5 people you spend the most time with. So choose those people wisely. Seek out mentors, role models, people who are living the kind of life you want to live. Learn from them. Be inspired by them. And then go out and inspire others. Because here's a powerful truth. As you grow, as you achieve your goals, as you become the person you're meant to be, you have the opportunity to lift others up, to inspire them, to show them what's possible when you believe in yourself and take action. Think about that for a moment. Your success isn't just about you. It's about all the people you'll be able to help, all the lives you'll be able to touch, all the positive change you'll be able to create in the world. That's the ripple effect of personal growth. As you change yourself, you change the world around you. As you elevate your own life, you create the opportunity to elevate the lives of others. So dream big, not just for yourself, but for the impact you can have on the world. Because when you tap into your full potential, when you become the best version of yourself, you become a force for good in the world. You become a beacon of hope, an example of what's possible when you believe in yourself and take action. Now let's talk about gratitude for a moment, because in the pursuit of your goals, in the process of becoming the person you're meant to be, it's easy to get caught up in what's missing, in what you haven't achieved yet. But gratitude is a powerful force. It shifts your focus from what you lack to what you have. It opens your eyes to the abundance that's already in your life. And here's the amazing thing. When you focus on gratitude, when you appreciate what you have, you actually open yourself up to receiving more. It's like you're sending a signal to the universe saying, I'm ready for more good things in my life. So take a moment each day to practice gratitude. Appreciate your body, your mind, your abilities. Appreciate the people in your life who support you. Appreciate the challenges you've overcome, the lessons you've learned. Appreciate the opportunity you have to grow, to learn, to become more. As you do this, you'll notice a shift in your energy. You'll feel more positive, more optimistic, and that positive energy will fuel your actions, your belief in yourself, your ability to create change in your life. Now let's bring it all together. You have within you the power to create the life you dream of. You have the ability to overcome any obstacle, to learn any skill, to achieve any goal. But it all starts with belief. Belief in yourself, belief in your potential, belief in your ability to create change. So right now in this moment, make a decision. Decide to believe in yourself. Decide to commit to your growth. Decide to take action towards your dreams. Because when you make that decision, when you align your thoughts, your emotions, and your actions with your vision for your life, you become unstoppable. Remember, Every great achievement in human history started with a single thought, a single belief, a single action. The device you're using to listen to this right now, the building you're in, the clothes you're wearing, they all started as ideas in someone's mind. Someone who dared to believe, who dared to take action, who dared to persevere in the face of challenges. You have that same power within you. You have the ability to turn your thoughts into reality, to manifest your dreams, to create positive change in your life and in the world. So what are you waiting for? The time is now. This is your moment. This is your chance to step into your power, to become the person you're meant to be, to create the life you dream of living. Believe in yourself. Take action, persist in the face of challenges, learn from your setbacks. Celebrate your successes, practice gratitude, surround yourself with positivity, and watch as your life transforms. Remember, you are not defined by your past. Believe in yourself. Take action, persist in the...
Bro, this is like some serious sauce.
Face of challenges, learn from your setbacks. Celebrate your successes. Practice gratitude, surround yourself with positivity, and watch as your life transforms. Remember, you are not defined by your past. You are not limited by your current circumstances. You are defined by your beliefs, by your actions, by your commitment to growth. You are limited only by your imagination and your willingness to take action. So dream big. Believe in yourself, take bold action, because when you do, you tap into a power greater than you can imagine. You align yourself with the creative force of the universe. You become a co-creator of your reality. And as you do this, as you step into your power, as you become the best version of yourself, you inspire others to do the same. You become a beacon of hope, a living example of what's possible when you believe in yourself and take action. So go forth with confidence. Go forth with belief. Go forth with the knowledge that you have within you, everything you need to create the life you dream of. You can do this. You will do this. Your success is inevitable. If you stay committed to the process, if you keep believing in yourself, if you keep taking action towards your goals, think about it this way. Every thought you have, every belief you hold, every action you take is shaping your future. You are literally creating your reality with your mind. So ask yourself, what kind of reality do you want to create? What kind of life do you want to live? What kind of person do you want to become? Get clear on that vision. See it in your mind. Feel it in your body. Because when you can see it clearly in your mind, when you can feel it as if it's already real, you give your brain a new target to aim for. You give your body new information to respond to. You start to create new neural pathways that support your vision. And here's the amazing thing. Your brain doesn't know the difference between what's happening in your outer world and what you're vividly imagining in your inner world. So when you consistently focus on your vision, when you feel the emotions of already having achieved your goals, you're training your brain and body to make that vision a reality. But it's not enough just to visualize. You need to take action. You need to step out into the world and start living as if you're already the person you want to become. This isn't about pretending or faking it. It's about aligning your thoughts, your emotions, and your actions with your vision for your life. When you do this, when you create this alignment, you tap into a power greater than yourself. You align your...
Yo, what's good, Eddie? How to watch the ad get in here? Hey, thanks for the money. Thanks for the money. Appreciate it.
living as if you're already the person you...
How you been though? How you been? All right, we're gonna hop in the charts. Probably gonna finish this video up later, and then we'll actually backtest. The title, I need to start switching my titles up, I guess. False advertising. I mean, I would say anything that has to do with like mental mental health and stuff like that, like I would consider that back testing, honestly, straight up. Okay, on NQ, we're in a deep discount. I'm not really looking at much. I am seeing these relative equal highs. We do have SMT, so I think that we'll likely get possibly get a Judas swing higher. We have this breaker here on the 15 right here that I think we could draw into and then see another displacement leg lower. But we'll see. It's another one of those days where it's just not as clear, you know? In my opinion. Y'all know that book, The Best Loser Wins? I think that book is... I think that book's kind of overrated. I would agree, bro. I would agree. I think ES definitely wants to take its draw. ES failed to draw into a 15-minute fair value gap, or it's failing to. I want to see. I mean, I definitely want to see how the first 30 minutes, and just be patient today. 100%. I want to be very patient today, but I don't want to be too patient because that's something I struggle with is being a little bit too patient. If you look at NQ in terms of downside draws. There's really none. I mean, we're within this daily imbalance here. So I guess we can grade this. Possibly see something at this 75% or 25%. So we're going to be monitoring that level. Overall, we have this imbalance. If we inverse this, that's what I'll be looking for, to possibly inverse that. But if we look at ES, we have a big sell side liquidity pool that we can draw into. It's this sell side liquidity pool on ES. But if we just inverse this imbalance here, I think we could see these equal highs. Because we technically do have SMT. And then we have this 5 minute. I want to monitor this too. We'll see. Like same as yesterday, I want to wait personally. Yesterday was just straight seek and destroy. Let's zoom out on the hourly chart. What's most likely? We just had a distribution on the hourly chart. Looks like we could possibly create a swing low here. So I want to see. Overall, I would expect this to form a fair value gap. And like we could be prone to consolidation again today. If we look at this, like we've already taken sell side. We've had a decent range overnight. Like 200 points, 1%. That's pretty decent. So I want to see. We have kind of displaced away, or we have displaced away from that new week opening gap. We're about to open here. ES is. I think NQ or E. I think the draw's still lower in my opinion. But we'll see. If we draw back into that new week opening gap on ES, that'll be telling. Because right now we're about 50% from one new week opening gap to the other new week opening gap on ES. Okay, we just open. Okay, it looks like we're drawing up at least into this imbalance, the 15-minute fair value gap, and then we have a breaker that we could draw into. ES is trading into a 15-minute imbalance, and then ES also has a breaker too. And then ES also has new week opening gap. I want to be patient today for sure. For sure. This big. This is a insane opening range gap. If we're at, that's crazy. Okay, look at that 5-minute order block level. Nothing yet for sure. Nothing yet. It's just patience. I wanna exercise patience. I am gonna put up like a little. I want to do one trade, one like tapery trade where I put the entry like yesterday. Yesterday, like I had the right bias, the right draw on liquidity. It was more about anticipating that retracement, and it was just. I was trying to cherry pick too much. I was trying to force my will onto the chart in that situation. And I honestly think I'm at a point to where I feel like sometimes I get too like, if I know there's nothing to lose, then like I'm like, okay, I don't really care because I'm not gonna lose anything on this trade because I'm not risking real money. So like some point I think like once I have a model, of course, going to live. But also, I'm here to give it time. I'm not here to rush it. All right, what is the 15-minute chart likely to do? Where are we likely to expand to? I would think that we would likely have an expansion move lower if we're looking at this. Like order flow is already established. We've already established bearish order flow. All right, ES has taken buy side. Drawn into that 15-minute imbalance. Have we tapped the low? No, we didn't. We've tapped an old low, which could be like some resistance, like real resistance. We'll see. I'd rather wait. We only have like 5 points of range until that sell side liquidity pool. Okay, ES about to take sell side here. Sell side taking on ES. We're about to fill that that BISI. Okay, we just fulfilled BISI on ES. Notice how we failed to retrace. Into that opening range gap. Look at NQ. Now established this swing high. I want to wait for this 15-minute candle to close to give me more insight on what we're likely to do. We could reverse this, and unless if I see a wick here at the low here, I think order flow is likely going to be bearish. We're likely going to continue. All right, here's that 75% level of that imbalance on the daily chart. Other than that, like I don't really got much other levels to really look for. Maybe a closure of the 4-hour imbalance, but that would just be a closure of the daily BISI here. So here's the next possible draw on liquidity. Alright, ES is about to draw into a new week opening gap here. After we fill the daily imbalance. Okay, we're within a new week opening gap on ES. Within 75% level of that imbalance of that daily BISI. Definitely bullish order flow here, but possible or a potential reversal, but I want to wait for this 15-minute candle closure to really even anticipate that, and I don't think it's likely. We do have 9:45 news, which is something to keep in mind. So like I'm saying, unless if we create a wick, I want to change this color. I don't. It's like a chill color. I feel like white's chill. Oh, ES looks nice off that new week opening gap. After just taking sell side. NQ's not really responding like ES. Yeah, we're likely to see distribution lower in my opinion. Especially on NQ. It's a trend day. I want to see what the 9:45 news does. How many points is this? It's crazy because like all this movement is like 100 points. That's crazy. On Nasdaq, I think my goal for a day is like 30 points, 30 to 40. I think that's a decent baseline. Like 30 points, get that partial. If not, but like 80% of the position off, and then let that 20% run to like the draw liquidity. All right, ES is at consequent encroachment of that new week opening gap. News in 5 minutes. I would favor a trade on ES if I were to trade along here, especially. But I'm tuning into this bearish bias. But just a potential possible reversal here. Like very. We have a volume imbalance on ES on the 1 minute. That I'm gonna note. Yeah, I think we're likely to see displacement. "9:45 news though. Don't sleep on it." Intermediate term high there, or sorry, yeah, that'd be an intermediate term high. It's in an imbalance. One minute till news. What's more likely? Expansion lower, in my opinion. Oh, and there's gonna be plenty more opportunity today. We could see looking for a full close of this imbalance here. Also have another daily imbalance here. We'll see if we just maul through that too. Kind of accumulating before this news event on ES. Yeah, I don't think there's anything here. On ES, we traded up into a new day opening gap. Also into a breaker. So let's see if we want to full close this imbalance. Alright, now let's watch this drop here. And even that, like a retracement on ES up into that like fair value gap. Like we've already delivered 6 points, 7 points, or 7 handles from that. 5 handles is all you need. About to trade into a 5-minute imbalance here. $9.50 macros opening up. Let's see if this starts to run to either buy side or sell side. The macro is supposed to run on whoever's profitable. Who's profitable? Who's profitable right now? The short positions are. So let's see. ES is within a lower new week opening gap now. We have a 15-minute swing point. $10 points has been delivered on ES. Just some phenomenal price action on NQ. Phenomenal. Dang, we are so bearish right now. I should see expansion here. Let's just see it from here to lower. Like, let's see, 30 points. Let's see if we get that. I mean, think about it. Like, we're failing to fill in that opening range gap. We immediately reject off of it. We're away from the new week opening gap. Structurally, we've created a 15-minute swing high. I mean, honestly, I just don't think this is like a good entry. We could have a further retracement, but ES is breaking. ES is displacing lower through 2 new week opening gaps right now. In terms of daily objectives on the downside for ES, I have constant encroachment of a daily wick. Other than that, we had these 3 down close candles. The lowest one, I'm gonna mark out mean threshold of the lowest candle. Dude. Mean threshold 25% level lines up perfectly with that constant encroachment. Here, let's pull it up. This down close candle right here, 25% of that lines up perfectly with the 50%. Notice how ES is displacing, NQ is failing to really displace. It's like just consolidating here. What happens after consolidation? Expansion. So I think we're likely going to see none of those new week opening gaps are they're failing to support ES here. Since the 950 macro too. I don't think it's anything, no type of entry, really, for me. Just monitoring this. Alright, NQ is likely to give up the ghost here. Alright, ES is now traded through constant encroachment of that wick. Next stop is mean threshold or what's that daily Sibby or Bissy, sorry. Buy side imbalance, sell side inefficiency. $30 on NASDAQ pretty much delivered. I have it at 30.75, so I'm fairly certain that. Thirty handles delivered. That's all I'm good for. It was only 30 handles. We just traded to an imbalance there. Alright, so 3 PD arrays here. Constant encroachment of this wick, constant encroachment of this wick, and then so if those 3 fail, yes, next. $10 a.m. opened. I kind of would like to see a reversal here. ES is just traded into the 25% of that order block. Also is constant encroachment of that wick. Overall order flow, what is it? It's bullish or it's bearish, so I wouldn't want to fade this. So I'm monitoring these 3 premium arrays. Once, if all these fail, then our ass is probably next. And notice we're not willing to make new fair value gaps off of this imbalance here. So that right there is an indication that we might have a little bit of exhaustion. But if we look at this on the daily chart, we're now drawn into a daily imbalance. We've had a huge expansion. So after that, probably some consolidation. Probably some consolidation. Now let's measure this whole range that we've created. Around a 390 point run. So I don't know. I don't think it's highest probability to try and step in front of this. Possible swing point here, but it's just not nothing that I really trust. If we displace above this, that could be something, and then this could be a draw on liquidity here. That could be a nice little run here, just to this imbalance. We are within that macro as well. Possible cysty. We're still respecting these premium arrays. Loki gonna tune into this video while Price is just chilling.
Want to become, this isn't about pretending or faking it. It's about aligning your thoughts, your emotions, and your actions with your vision for your life. When you do this, when you create this alignment, you tap into a power greater than yourself. You align yourself with the creative force of the universe, and that's when the magic happens. That's when you start to see synchronicities in your life. That's when opportunities start to appear. That's when you start to attract the people, the resources, the experiences that support your vision. But here's the catch. You have to be ready to recognize and act on those opportunities when they show up. You have to be willing to step out of your comfort zone to do things differently, to become someone new. Because that's what this journey is all about. It's not just about achieving goals or acquiring things. It's about becoming. It's about growing into the person you need to be to create the life you want to live. And that process of becoming, of growing, of evolving, it's not always easy. There will be challenges. There will be challenges. There will be times when you feel like giving up, and that's okay. That's part of the process. In fact, those challenges are essential for your growth. They're opportunities for you to develop new skills, to build resilience, to prove to yourself what you're capable of. So when you face those challenges, don't shy away from them. Don't see them as signs that you're on the wrong path. See them as opportunities to grow stronger, to become more resilient, to develop new abilities. Remember, every challenge you overcome makes you stronger. Every setback you bounce back from builds your resilience. Every fear you face down expands your comfort zone. So embrace the challenges. Welcome the setbacks. Face your fears head on, because on the other side of those challenges, those setbacks, those fears is growth, is achievement, is the life you dream of living. Now, let's talk about your daily practices, because creating the life you want, becoming the person you're meant to be, it's not a one-time event. It's a daily commitment. It's about the choices you make every single day. So start your day with intention. Before you even get out of bed, take a few moments to visualize your ideal day. See yourself moving through your day with confidence, with purpose, with joy. Feel the emotions of living your ideal life. This simple practice sets the tone for your entire day. Then, throughout your day, stay mindful of your thoughts, your emotions, your actions. Are they aligned with your vision for your life? Are they moving you closer to your goals? If not, pause, take a breath. Choose again. Choose thoughts that support your growth. Choose emotions that energize you. Choose actions that move you towards your goals. And at the end of your day, take a few moments to reflect. Appreciate your successes, no matter how small. Learn from your setbacks. Set your intentions for the next day. This daily practice of intention, mindfulness, and reflection creates a powerful cycle of growth and achievement. Now let's talk about energy, because everything is energy. Your thoughts are energy. Your emotions are energy. Your actions are energy. And the quality of your energy determines the quality of your life. So pay attention to your energy. Notice what elevates your energy, what drains it. Surround yourself with people who lift you up, who inspire you, who believe in you. Engage in activities that energize you, that fill you with joy, that make you feel alive. And when you notice your energy dropping, when you feel yourself getting pulled into old patterns or negative thinking, pause, take a breath, shift your focus. Remember your vision. Remember
Yeah, I think we're just gonna continue to have a large range day, and then just just consolidate.
Remember why you started this journey. Remember the person you're becoming. This isn't about forcing yourself to be positive all the time. It's about being aware of your energy and making conscious choices about where you direct it. Because where your energy goes, your life flows. Now, let's talk about your mind-body connection. Because your mind and body are not separate. They're part of one interconnected system. What affects your mind affects your body and vice versa. So take care of your body. Feed it nourishing food. Move it in ways that feel good. Give it the rest it needs. Because when your body feels good, when it's energized and healthy, it's easier for your mind to stay focused, to stay positive, to stay committed to your goals. And take care of your mind. Feed it inspiring thoughts. Move it in new directions through learning and growth. Give it the rest it needs through meditation and quiet reflection. Because when your mind is clear, when it's energized and focused, it's easier for your body to take the actions needed to achieve your goals. This mind-body connection is powerful. When you align your thoughts, your emotions, and your physical state, you create a force that can move mountains. You become unstoppable. Now, let's talk about time, because time is one of our most precious resources, and how you use your time determines the quality of your life. So be intentional with your time. Use it wisely, invest it in activities that move you towards your goals, that help you grow, that bring you joy, and be willing to say no to things that don't align with your vision for your life. Remember, every time you say yes to something, you're saying no to something else. So make sure you're saying yes to the things that really matter, to the things that align with your vision, to the things that help you become the person you're meant to be. Use a powerful truth. You always have time for what you prioritize. So if you find yourself saying, I don't have time, what you're really saying is it's not a priority. And that's okay. Not everything can be a priority. But be honest with yourself about what your priorities are. Make sure they align with your vision for your life. Now, let's talk about your environment, because your environment shapes you. It influences your thoughts, your emotions, your actions. So create an environment that supports your growth, that inspires you, that reminds you of your goals. Surround yourself with visual reminders of your vision. Create spaces that energize you, that make you feel good, that support your productivity and creativity, and be mindful of the information you consume. Fill your mind with content that inspires you, that teaches you, that helps you grow. Remember, you are the average of the 5 people you spend the most time with, so choose those people wisely. Seek out mentors, role models, people who are living the kind of life you want to live, learn from them, be inspired by them, and then go out and inspire others. Because as you grow, as you achieve your goals, as you become the person you're meant to be, you have the opportunity to lift others up, to inspire them, to show them what's possible when you believe in yourself and take action. Think about that for a moment. Your success isn't just about you. It's about all the people you'll be able to help, all the lives you'll be able to touch, all the positive change you'll be able to create in the world. That's the ripple effect of personal growth. As you change yourself, you change the world around you. As you elevate your own life, you create the opportunity to elevate the lives of others. So dream big, not just for yourself, but for the impact you can have on the world. Because when you tap into your full potential, when you become the best version of yourself, you become a force for good in the world. You become a beacon of hope, an example of what's possible when you believe in yourself and take action. Now, let's talk about gratitude, because in the pursuit of your goals, in the process of becoming the person you're meant to be, it's easy to get caught up in what's missing, in what you haven't achieved yet. But gratitude is a powerful force. It shifts your focus from what you lack to what you have. It opens your eyes to the abundance that's already in your life. And here's the amazing thing. When you focus on gratitude, when you appreciate what you have, you actually open yourself up to receiving more. It's like you're sending a signal to the universe saying, I'm ready for more good things in my life. So take a moment each day to practice gratitude. Appreciate your body, your mind, your abilities. Appreciate the people in your life who support you. Appreciate the challenges you've overcome, the lessons you've learned. Appreciate the opportunity you have to grow, to learn, to become more. As you do this, you'll notice a shift in your energy. You'll feel more positive, more optimistic. And that positive energy will fuel your actions, your belief in yourself, your ability to create change in your life. Now, let's bring it all together. You have within you the power to create the life you dream of. You have the ability to overcome any obstacle, to learn any skill, to achieve any goal. But it all starts with belief. Belief in yourself. Belief in your potential. Belief in your ability to create change. So right now, in this moment, make a decision. Decide to believe in yourself. Decide to commit to your growth. Decide to take action towards your dreams. Because when you make that decision, when you align your thoughts, your emotions, and your actions with your vision for your life, you become unstoppable. Remember, every great achievement in human history started with a single thought, a single belief, a single action. The device you're using to listen to this right now, the building you're in, the clothes you're wearing, they all started as ideas in someone's mind. Someone who dared to believe, who dared to take action, who dared to persevere in the face of challenges. You have that same power within you. You have the ability to turn your thoughts into reality, to manifest your dreams, to create positive change in your life and in the world. So what are you waiting for? The time is now. This is your moment. This is your chance to step into your power, to become the person you're meant to be, to create the life you dream of living. Believe in yourself. Take action.
There's a silver bullet.
And I'm not saying I'm the God, but I am a God.
Today's guest is Jabril Muhammad. You may know him better across very strongly two really strong influences in your life, especially early. One being your older brother.
I think over here, we could have a buy program up to equal highs, equal highs, equal highs.
like a regular career just never stood out to me. Being a lawyer, being a doctor or whatever, it just never stood out to me as the path that I was supposed to take to change the world. And when I was younger, working a job, I remember almost getting depressed because it was like, this can't be the route of, totality. This can't be my 100%. You feel me? Like times where I ain't have a job, ain't have a car, right? Sometimes sleeping in the car and, being at my pop spot where he got another woman and it's really her spot. And I'm like, nah, man, this ain't me. You feel me? Like I'm an old god out here. So that makes you go to a dark place a little bit, smoking, drinking, moving about, doing whatever you do. You feel me? And at that point in time, you would do anything to, get out your situation. So I think that if there was a slave to anything, because I've never been like addicted to nothing per se. You feel me? But it's just the fears of inadequacy.
Yeah, no, it's that's a big thing, because when you have that vision and you have an awareness of what your potential could be, but you're not living it right now. It's like that difference, that contrast is difficult to manage.
And it's really, just getting back in alignment with self. Like if you feel like that, it's because, what you're currently doing is not aligned with who you really are, right? And so it could be like, are you even learning? Are you even developing, right? Are you even putting yourself in that environment? And when you know that you're not even in alignment with that, then you feel guilty, right? And then that guilt can go to shame, and shame is the worst feeling from there. That's the bottom, because when you feel shame, you feel like something wrong with you, right? And you feel guilty, you feel like you're doing something wrong. And so you have to ascend that frequency ladder, right? Because you have to get out of that emotion to start feeling joy, to start feeling pride in yourself, right? And the higher you go up, that's when you start living correctly to say, okay, this is where I want to be. Let me maintain this. But I've always been good at facing, my fears and facing the shadows and conquering them, right? To this day, I'm not going to deny nothing about myself to myself, right? If that's what it is, all right, we're going to integrate with that, then we're going to control it, then we're going to move forward. Because once you acknowledge it, now you have power over it. And the problem is people don't want to acknowledge it, but it's still going to be controlling you whether you acknowledge it or not. So instead, you might as well integrate, understand it, right? Where did that root it from, then control it, because now it doesn't have power.
You know what, there's I'm going to butcher the quote, but there's a quote that like don't be a fool and you're the easiest person to fool. Like we lie to ourselves more than anything. You know what I thought that you said was interesting earlier on? You talked about like this duality between almost like kind of like a criminality and like the streets, and then almost this higher consciousness and this discipline and reaching the highest potential. And it was interesting when I was listening to some of your videos, you called it savage keys. That was the savage keys.
Savage keys was on his mobbery.
Can you talk about that? Because I think there's a lot of people that would resonate with that, where like they kind of come from this environment where there's a certain influence, but then they also have kind of this larger vision for what their life is, and they kind of swing this way and they swing that way, especially when they're younger. Tell me about the savage keys era. Quick break. This episode is not sponsored by Huel. One day I hope it will be, and here is why. So my story with Huel is an interesting one. I'm locked into my local. I would stop at the favorite record. It is 100% the audience.
Keys, savage keys. It's just speaking on, growing up in Oakland and St. Louis when we was in the streets, just being dumb, being stupid. I always let my brother Steve tell the story more when we have our man-to-man show, because I don't want to feel like I'm bragging about the past and none of the stupid shit that we used to do back in the day. But, it's when you think about being young, dumb, drunk, high, just momming, got an attitude, you feel me, against the world, things ain't going your way. You get in fights, you get in shootouts, you feel me, you go do some things. You feel me, you go catch some cases, you go be around the wrong people, you go treat people a certain way. You go live a very risky lifestyle. You feel me, as if you're trying to get to fast death and you're trying to get you some fast money. And we was into all of that. So for me, Savage Keys was just somebody who was smart, but he didn't know what he didn't know. You know what I'm saying? And his environment, had influence on him, a lot of influence. So it didn't matter how smart you was, because you wasn't around an environment that was nurturing your true nature and who you really are as a God. But I had to go through all of that. You feel me? Because now I can relate to somebody that's in the street. I can relate to somebody that don't have a key in their life, or somebody that can help guide them in the right direction, or they don't have, that ethic of learning to where they can develop their own mind and get themselves out of it. Everybody don't have them different archetypes in them that they can feed. You feel me? Where I gotta have my warrior. You feel me? I got my creative side, I got my spiritual side. All of those need to be fed at all different times. But to be honest, that era was one of the best eras because it showed me what I was capable of. When you out in the streets and you're doing something wild, I don't think people understand the adrenaline that comes from that. Right? It's almost like a drug. You feel me? Where you go on a mission and it can be life or death. You feel me? You could be locked up, you can get caught, anything can happen, and you just out there fearless, still, heart beating, pumping, then you do it and get away with it. Oh man, you start to feel invincible. And so it's different though, where that's the wild side. But when you start to civilize yourself and you want to put order and structure, that's harder. You feel me? That's way harder. And it's harder for a different reason, because you got to use your mind, and now it's just a battle with you. Right? It's a battle with yourself. Now you go structure and order these things, you go learn. Right now you want to build something, because first law of the universe, that's motion. Unbelievable Muhammad teaches. The second law is order. The streets got motion. Right? You in movement. You out there, you wild, you got energy, but now it's time to structure that. Right? That's order. And everybody don't have order. And you know, speaking to my brother Nuri Muhammad, he has a book called The Mathematical Mind. He speaks about when you live a clean life, you have it hard in a harmonious environment, in a harmonious life, and things start to become more ordered. And in the hoods, it's not clean. It's a dirty life. You're getting your hands dirty, right? You sinning. You're doing things that's off target from who you really are, right? And so you're going against yourself, and you feel guilty, and you got a self-accusing spirit that's always beating you up every day. And you try to drown it out. I need the liquor. I need to smoke. I need to be in a social environment where I'm kicking with people. I do not want to be dealing with this demon talking to me, or the God in me talking to me. Because sometimes people think it's a demon, and it's really God telling you, bro, you tripping, bro, you wilding. Why did you do that? You know what I'm saying? What's wrong with you? And now you playing this over and over and over in your head, and it becomes a cycle, and it leads to a depression because you're stuck on that same emotion. And it's not until you get motion in the right direction and start developing order and start to change your needs. So we got needs that we have, and when you grow up in an environment where you have insecurities, right? You ain't get enough love. What you gonna need? You gonna need some love. You gonna need some significance. You want to feel like somebody. When you didn't have proper connections, right, in your life, proper relationships, you want to feel connected. When people didn't acknowledge your efforts, right? You want to feel like you're contributing to something, right? When you got a broken family, you're gonna want a community. These are needs that we have. And when you grow up in these environments, it rearranges your needs in the wrong order, right? Because we really should be focusing on growth. Every man should be focused on growth and challenging himself, right? Putting himself through adversity, right? On purpose to see what he's made of and what he's capable of. On purpose, that's the warrior spirit. I'm challenging things. I'm revolting against things. That's the power of how you get to know yourself. But when you grow up in these environments, no, I need to be significant because people treated me like I was nothing. So now you're doing things for the wrong reasons because you're starting off with a deficit, right? So when you come from an environment of love, you have wealth because your needs are fulfilled. But when you come from an impoverished environment, your needs are not fulfilled. So now this one becomes more important than it should be, right? But when you come from a proper environment, a proper love, structure, order, community, right? People acknowledge what your efforts are and your contributions. Now they're arranged properly. All right, let me focus on growth. Let me get my knowledge and my skills up. So therefore, right, I can now make the contributions. Therefore, I can build the connections, and that's going to make me feel significant. You see? So now it goes through this chain, right? And successful people have a pattern of habits. And when you learn how to properly fulfill and reorder your needs, then you restructure your life with the proper order to start building success and start building wealth and start building power. So we got brothers out here be fighting each other on platforms. You know what I mean? Going at each other. Why? Because you didn't get the proper love in the household. You didn't get the proper significance in the household. Nobody told you, right, about your efforts when you was young and that you were contributing to something. So now you need that more than ever. It's like, no, bro, man, let's grow and take over the world. What we fighting each other for? We got bigger enemies outside. So when I see men, right, and I audit myself, I say, okay, I see what you need the most. That's why you are moving the way that you move, right? Because before you even get to the growth, before we think about, the community growth, we're thinking about our significance first, right? We're thinking about, oh, I need love the most. You know what I'm saying? Because it's missing in you. So for me, growing up as a savage, it was just because my needs weren't correctly ordered, right? And when I didn't need that anymore, I can, give back to God by the keys, turn it into 19 keys.
Yeah.
Yeah.
One of the things that you mentioned a lot, I love it, is the knowledge of self. And even when you were speaking, it hit me, which is like, we have so much like trauma. We have so much, so many things that have happened to us, and we're not even aware of it. We're aware that it might happen. We're not aware of its effects. We don't see the link between, wait, why did I lash out at that situation? Why did I start drinking more that month? We don't see all of the signs and how things are linked together. And because it's so unassuming, because we don't have the true awareness of it, it's even more dangerous. It's like it's the most dangerous because we can't even see it. It's just in the mind. It's like in the recesses of your mind. And so at an early age, and it kind of comes through.
All right, I want to wait a little bit.
Mentioned the Thursday's high and low and said that we would be inside that range. It would be an inside day. That's Friday. We had a lower high than Thursday's high and a higher low than Thursday's low.
I won't, and you will lose that bet. I won't even know what's going on. I'm not even going to look at YouTube. I'm not even going to look at any social media whatsoever. Okay, so far dollar index hasn't really made its way into that 102.25 level just yet. Like you want to rebalance that little area that's created in the most recent final candlestick that we're transforming after. So in other words, that little tiny little space on the 950 5-minute candle on DXY up to the low of the previous candle, 5-minute candle at 945 with the low of 102.29. It would be nice to see that small little gap that's still there remain there, and then animation to the downside. I'd like to see 102.10 breached and get below 102 for dollar, just so you know. I'm not trying to pick the top one, ES. I think the afternoon session today from 2:30 to 4 will probably be very busy. We'll probably see a lot of nice price swings. Well, why didn't you live stream that? Because I have a wife that tells me that she needs my attention on her and the family at specific times, and she's calling the shots on that. Okay, watch your dollar. Digging into that 102.25 sell side now. Okay, it's 10:01. Just went underneath the low on that 5-minute candlestick for sell side on DXY. Did not get any kind of expansion below it. So it's only went below it. Very small movement below it. We're back inside that little gap I mentioned. Watch the 102.29 level, $1. So far, everything's agreeing on that higher high for the 3 indices. NASDAQ confirms the higher high. Dow has confirmed the higher high. So I'll cycle through those right now so we can see it. We're on ES right now on 1-minute chart. So what we're looking at is the relationship comparatively and respectively with these higher highs here. We'll look at NASDAQ first. Okay, so you had higher highs there. And the Dow. Whoops. And higher highs in the Dow. So we haven't had any kind of indication of waning sponsorship across all the 3 indices. And again, we don't try to pick tops. Now, when I'm looking at price like this, and pretty much this entire week really, see all the give and take back and forth in here? See how it's back and forth, but still gravitating towards levels
that we can anticipate seeing them traded to, but it doesn't give us a real clean area of this is where I would like to enter. This is a very low risk, high probability entry. When I see price action like this, I refer to it as being spotty. Okay, it's a little too messy. It's not precise. It's not allowing for precision, and it may have a hallmark of going to levels that we talk about and what I've been referring to all this week. But just because it goes to that level doesn't mean that it's offered us a, or at least let me speak in personal terms, it hasn't offered me a whole lot of precise entry points this week. So when it's like that, you have to be very patient. Don't demand a whole lot because the market's going to do what it's going to do regardless. And if it's not presenting it to you in a manner that is very obvious, where it's one-sided, you can clearly see an inefficiency, you can clearly see a run on stops, and then expect it to go the other direction. I haven't seen that much of that this week. So like I said, if you've been studying it, looking at it, or trying to paper trade or whatever, and you've had adversities that you feel that are not common, it's because of what I'm outlining here. It's been a very difficult week for price delivery. It's real spotty. It's real just messy. Okay, dollar's going to need to make its lower lows in here. It's going to do it. Otherwise, we're going to bang inside the 102.25, 102.41 range, 5-minute chart respectively. I don't like this. See how you can draw an imaginary trend line, diagonal support? I don't like that at all. When lines look real clean like that, I don't like that. Meaning that it could easily just spike down in here and upset that smoothness that would be considered diagonal support, which I don't have any faith in. So I already know that this 10 o'clock to 11 o'clock hour is going to be formidable in terms of finding the silver bullet setup. But I'm committed to spend the entire hour with you and outline it as I see it, okay? Do not push the button. Don't copy it. Don't try to go in and do something with your live account or your funded account or your challenge that you want to beat your combine. So I'm looking across like Forex pairs to see if I can get a better read on risk on, risk off. Euro dollar has a little bit of buy side on the 5-minute chart, just above 108.95. It's got real close to cleaning up that 5 o'clock in the morning short-term high. Pound dollar, it's a bit of a mess on that one. 1.24 even. There's buy side there. So if we can get that 102.25 to get up the ghost on the dollar, those areas could be traded too. It's not much of a range, admittedly, but that's how I see on the Forex front. The Dow looks really, and I'm going to be very careful saying this, but it looks very toppy. Looks very like it's run out of steam on the upside. But you got to be careful on days like this because it can still pump up there and usually make it a larger extension to the upside where it just, you don't expect a big range move come in and they deliver it. Where it kind of just railroads you. Alright, dollar index trying for that 102.25 level to wash that out more prominently. I don't know what the membership level for TradingView that you need to have to get 2 charts side by side. I don't know offhand what that is because I have the highest form of whatever they offer. So I don't know, and I don't get any kind of kickback. I'm not trying to tell you to buy anything from TradingView, but it would be advantageous for you to have a dollar index chart and the chart you're watching, whatever market that be. If it's a Forex pair, it still works. If it's an indice like ES that we're focusing on, that way you can measure real time the relationships of risk on, risk off. There we go, we got that washout on the sell side we're looking for dollar index. So really this should be having a run above that 104 on ES. And there's the euro dollar running into the buy side I mentioned. And cable's still hanging around and trying to do much at all so far. And ES, it looks like it wants to upset that trend line I was talking about. Trend line phantom. Tough read in terms of trying to do an execution, let's put it that way. So the first question, now that we're in the 10 o'clock hour, is where is the draw? Where do we want to see it reprice to? Because without that, we're like a sailboat without a rudder. We don't have any way of navigation
we'll just be at the mercy of the tide of, or current. And admittedly, nothing at the moment really jumps off the chart to me, which is one of the reasons why I said moments ago that this is going to be a difficult one for me, but that's how it is sometimes. So we have that wick on dollar index. Watch the wick on 5-minute chart. You want to get constant encouragement on the 3 a.m. candle. So split that in half. We're trading there now. And any animation to the downside gravitates towards 102.10. And then the sell side resting below it. 102.04. So now think about it like this. In all this movement here in price, there's really no inefficiencies in here to operate off of. And each new high has been posting a new high and then pulling back down into the range for no purpose that makes sense to me looking at the chart. And where do you go in? And this is the internal dialogue I'm holding right now with myself. Where do I go in and then frame the risk? Like, where would my stop need to be? I can't define it where it's low probability. I'm sorry, high probability, low risk, when everything really is low probability and high risk. So I can't define anything yet. And it's still early. It's only 13 minutes into 10 o'clock hour. So it has to be obvious. It has to be absolutely obvious as to what it wants to reach for, which right now, the only liquidity and reason to draw higher is that constant encouragement of the daily chart on March 6th. And it doesn't need to go there. I just see that as a potential upside still that has yet to be traded to. If the dollar index rejects going lower and has something that's bullish in here that says no, we're not going to go lower, and we have displacement here lower on ES, then I would look for an opportunity to draw down into the opening range gap high, which is the opening price. So stripping everything aside, gun to my head, if we can't go higher on ES, okay, so I'm going to pose the argument for looking for a short, not that there is one yet, but if we displace lower and create a fair value gap in here, that could set the stage for a short to whatever fair value gap, if there is one, we don't have it yet, that would trade down into the opening price at 930, which is this price right here, 4090.25. See what it's done? Trades down below that, trades down below that, no follow through, nothing in here that's an imbalance, there's no inefficiencies at all. So it's hard to come to a determination of it's obviously going to go higher, it's obviously going to go lower, and make an argument that it's one-sided. I can't do that, and these are my concepts, so I can't do that with what we're looking at here. So the market has to do something in the form of displacement where it just shows like it tips its hand to you, and it hasn't done so yet. So you have to be very patient, and knowing what you're looking for makes it easier to wait. But when you don't know what you're waiting for, you're afraid that something's going to jump off the chart and run away. But you won't be able to see that coming as a new student or a new trader. And that's why new traders chase price, because they don't know what they're looking for or waiting for. So they just dog pile in on a move that's already underway. And they don't know where to put their stop loss, or they don't use a stop loss. And any realistic retracement in the initial run will scare them out. And then when they get out of it, or get stopped out because they're pushing their stop loss too close to the marketplace, then it will move in their favor, and then there they are. They're upset because they didn't know what they're looking for. Their fear of missing out overtakes them. And they're reacting to price, which is what we don't want to be doing. We're anticipating. We're looking for something that we understand is likely to form between 10 o'clock and 11 o'clock. It needs to be one-sided. It needs to have an obvious reason to go one direction or the other. So far, we've not seen the dollar index continue lower, below that 3 a.m. low. We do have a small little city that it's working inside of on the 5-minute Dixie or dollar chart. And that candle's the 10:05. So part of this year's mentorship, by putting you in these conditions and watching price when it's not easy, it's helpful, even though you may feel like it's counterproductive. It's very helpful to you to get a baseline understanding about what it's like when you don't really want to be trading. These are the environments, these are the conditions. You don't want to push it. But I promise you, if you go back and look at your losing trades or where you've lost your account, it's when it's like this. And you toss in through a mental breakdown and psychological fatigue of just waiting for something to happen. That's what happens when you push that button. What's going to happen if I push the button and enter right here? I might get lucky, and you start trading with a lottery mindset. That's gambling. So it has to make sense. It has to be in the chart clearly one-sided, or you don't push a button. And if something happens and the market moves, and you weren't part of it, it's okay. It's okay. It moved this morning at 8:30 without me. It moved overnight again without me. Most of this entire weekly range, even though I was looking for high prices, it moved without me. I didn't have an area where I could really engage well with it. So it moves without me. You have to give yourself permission to be on the sidelines sometimes when the market moves. You can't be in every price swing. You have to sleep. You have to demand that the market's going to preside.
provide you rather a setup that's clean. It has to make sense logically within the context of your model. It has to make sense from a risk standpoint. You have to be able to frame the risk. And arguing the other side of the trade is a difficult task. If you can argue both sides, which is what we're saying essentially here, because it hasn't done anything in this choppiness here, it could still go up and hit the 104.75 level, which is consequent encouragement of March 6th daily candle premium wick. So half of the wick, that's what that level is here. And I said I would show you that. I apologize. Let me see. That's that wick right here. There's March 6th. That wick, when it's above the candle, it's a premium wick. When it's below the candle, yes, I understand it's referred to as a tail, but it's a discount wick. In my vocabulary that way, when you're hearing me or seeing things referred to on Twitter, that's what I'm talking about. Premium wicks are above the body. Discount wicks are below the body. So my question to you is this, and sincerely think about this, okay? I'm not trying to be facetious. Looking at this price action right here, right now, does anything in this inspire action on your part? And I'm not talking about impatience or gambling, the impulsiveness to just get in there and do it. Because some of you are thinking, I'm probably going to be right about that 4104.75, so why not just buy here and get 5 handles of a run? Okay? If you want to do that, where are you framing your risk? Where's the stop loss going to be at? Because I don't know where I would be putting that and feel like it's safe and not the static price action that we're seeing back and forth. This is spotty price action to me. Okay, it's just back and forth. It's not trying to get anywhere in a hurry, which is one of the hallmarks. This is a signature to what I'm trying to trade. All the examples, when you see me recording them and getting involved in these price moves and pyramiding and building positions up larger, 6 contracts, 3 contracts, 1 contract, building up, and then it goes to my targets and it quickly runs down there. You're not seeing that in this price action. And you're hearing me explain why it's not likely to be that type of trade. It's not likely to be that kind of session yet. All that can change in an instant. All it needs to do is displace. Dollar index has failed to go lower. We're in an area right now where it could revisit the equilibrium of the range that's been formed on dollar's 5-minute chart. If you look at the high at 910 to the low that was formed at 1010, that range, split that in half, the equilibrium of that range. I'll tell you what the price is in a second. 102.296. So if it starts to move above that, that's problematic for initial upside for ES. And that means that we could potentially have a AM session in return high here. Displacement lower, that creates a fair value gap. I would feel confident that we would then, at that time, trade to the opening range gap high, which is the 930 opening price. This candle's opening price. So you can watch that right here. See this upper left-hand corner? Oh, that's the opening price. On this candle, that opening price is 4090.25. So if dollar can manage to get above 102.30, if it starts to move above that, that's problematic on continuation on the upside for ES. We would wait, submit ourselves to time, and wait for a displacement lower. And if there's a fair value gap, that's what I'm looking for, that move. Otherwise, I'm sitting still because it might just want to spike up into that 4104.75, and then I have to wait for more information. This type of price action is what I expect on the week, like next week. That this is typical of what I expect during those types of holidays. You may not celebrate it, but a lot of big money does. You'll probably see some wonky price action next week as well. And you probably might see several price action moves that are just amazing. It's okay. They'll be there when I come back. First live stream after today will be April 11th. So no live streams prior to that. Okay, dollar index is just underneath that 102.30 level. As I mentioned, anything above that, that's problematic for ES going higher. Euro dollar is rejecting its 109 big figure. And cable just never joined the party on the upside, so even this, I don't see anything I could work with for Forex either. Let's cycle through the indices. Now, I guess this is one of those times when people that do live streaming all the time, this is probably where they feel the impulsiveness to feel like they have to do something for their audience. Whereas myself, I don't care if you're bored or you watch the stream and nothing happens, because that's the real world. Okay, you're gonna have times when you have a model, when you know what you're looking for. You're just gonna wait for the model to
I just typed the same thing, didn't I? Talking and doing things on this is something that's outside the scope of my skill set, apparently. Can't walk and chew bubble gum. So, yeah, that's ugly, isn't it? Somewhat of an imbalance still in here. I'm looking at the Dow, by the way. It's a 1 minute chart. It would need to stay above that area there. That's a mitigation block, by the way. Knowing when to sit still, that is a skill set that is priceless. You can't put a price tag on that. Knowing when to sit still. So dollar index is traded above that equilibrium price point I told you about. That would be problematic. So we're watching ES to see if it shuns that 4104 levels for now and wants to go lower. Or does it spike up there, reject it, and then reprice lower. There's short-term buy-side risk thing right above here. So they could be coming up there, bumping that, and it hit the 4104 and 3/4 level, which is consequent corresponding to the wick on March 6th daily candle. British pound versus US dollar has moved lower, 20 handles, 20 pips, 20 pips, apologize. Just in striking distance on that 4104.75 level.
Wow, this brother taken today. Trending environment away from New Week opening gap. New Week on got.
Dollar is still expanding to the upside, so this is, in my opinion, it's a suspect rally, meaning that it's probably just bumping the buy side and then potentially rejection. Still giving opportunity for 4104 to be traded to. So even though that the market is being very fickle right now, fickle meaning that it's just not cooperating, allowing really nice clean price runs and setups, we can see, like I mentioned on the dollar index, how that's likely to pull up, and Forex offered 20 pips on both the euro and cable. ES is just being stubborn still. So there's that buy side. I just pumped into that. So this is halfway decent so far. If we can break down below that and not get crazy on the downside, we can use this as a breaker. So we would have high, low, higher high, taking out buy side. So these two candles here, we would extend that out in the future as a rectangle, and then we would see it maybe offer resistance there, but it would need to trade below to do so. Now, if the dollar was to just completely lose where it's at right now, go lower, that 41.19 level on ES, that would be something. There's a buy side here, buy side and sell side efficiency. Shift in market structure, even though 41.4 I like, if we trade through that up here. The shade area, by the way, what is that? The shade area is a volume imbalance on the daily chart, and this is the March 6th high, daily high. Problem with this one is we have a Dow lagging, which you can keep. I told you that it would need to stay above here. If it's going to be bullish. If it trades below, that would be weak. Nasdaq higher. ES. Volume balance. Do it all the time. Different platforms, different rules.
We've had that SIST. It's order block.
Volume balance. And a run on that, so 4108.5. That level there. Off the volume balance. That's just underneath the 5 handles. Pretty if you're using that volume balance. I'm looking at dollar index to see if it wants to slip hard here, lower. NASDAQ is leading the way on the upside. ES and Dow are lagging. See 4108. 50 can print. Dollar index is still consolidating. Euro slipping lower. Pound dollar slipping lower. So we have a mixed bag this month. NASDAQ just ripped up higher. Dow is still failed to make a higher high respectively. Let's see if we can book that 410850 level before I talk about the difference between. And dollar still trying to move higher while this is pressing a new high today. Not a good thing. Let's settle through real quick. Lower high. Higher high, leader among the averages. So it's more stronger than the other two Dow and ES respectively. And here's ES. So ES has hit our 4104.75 level, went above it a little bit. Dollar has not went lower. And Dow is slipping with a lower high. Lots of stops have been trailed up to here now. So we now have sell side resting below there.
I think the market right now it's a PM session.
There's not really trouble up here. And then here,
Is
all this consolidation in here.
only what I look for.
So you're going to run your sell side, or sell stops, resting right below that, and hoping to catch further upside. So there's lots of liquidity resting right here. I don't need a book map or heat map or whatever that gimmick stuff that other people might use to see where liquidity may reside. You can see it in the narrative of price delivery. And it's basically price action 101. You don't need a tool that had additional attention spent on. You have to keep your eye on price action. If you're looking at anything else that would take your attention away from the open high low close and the delivery of price, you're diluting your attention and your focus. And that small little micro fraction of a distraction is just enough for you to miss the entry and then be upset that you missed your entry. And it completely has a horrible effect on the day's performance, even if you were managing to be profitable after that. It's a 1040. Dow's just not supporting any of this upside. NASDAQ wants to go for another higher high. The dollar index is just not happening at all. It's just hanging around the equilibrium, or above it rather, of that 5-minute dim range on its morning session. Apart from the dollar, apart from the dollar not helping much here, and the Dow being a laggard, this would be the setup from here up into the 4108 and a half, and the one down supporting here. So while that's not a fair value gap, that would be supporting it. But I don't have the Dow behind me, I don't have the dollar index, so that makes this a very low probability setup, but you'll watch it nonetheless. NASDAQ's higher high. I'll show you. Higher high there. ES is yet to make a higher high. And Dow, still a laggard. So if you are of the mindset that you just want to look at one chart and not have any kind of intermarket analysis that would support or negate an idea that you may be looking to participate in my opinion, it's just, all that it is, it doesn't mean that I'm right, but I think that you should always try to weigh out your trade idea with other markets because it'll help filter out opportunities that may not be as high probability. Meaning that in a perfect world, in a symmetrical market as I call it, excuse me, the advancing on ES going higher off of the buy side bounce here and the volume bounce here would be best supported with a lower dollar. It should be moving lower on its 5-minute chart. The NASDAQ has already shown one to make a higher high. The Dow has not been a higher high, so we would want to see the Dow really try to catch up and go higher, and that would provide more fuel to ES going higher. Now right in here, see this little small gap right there? That's one. The next PD array would be the high, and the third one is the volume bounce. So with that in mind, if this was going to go higher, make a higher high like NASDAQ did, the Dow would have to climb higher, and the volume bounce down here would be the last line of defense for that idea. So you have one PD array, 2, below that's the volume bounce. You wouldn't be incorrect if you said the constant portion of the wick 2 instead of the volume bounce. So either or, but I would prefer to see price remain above the volume bounce if it's going to go higher to 4108 to 4110. And ultimately, if the Dow could turn direction, which it just need a lower advancement, and now rejecting off of, so let's take a quick look at Dow.
So it would need to really spring up here. Sugar line is the one to go higher. So really short-term ultra high frequency trades. I like to look for these types of little moves here and do, like this would be a partial, and that would be my turn for a short-term scalp. So this price like here, I would treat that as a fulcrum point, meaning that whatever that movement lower was, it would be added to, and that would give me a standard deviation of -1. So I'm watching the Dow here. I apologize. Quick look at the Nasdaq. See how the bodies respected that gap, and then someone controls it, sitting there thinking, oh, it's gonna crash. The bodies tell the story, the wicks do the damage. And the volume balance here, and it's above this high. So in that instance, I would like to see that stay open, not be retreated to, because it would be treated as a breakaway gap. Even though the wicks overlapped into the previous candle's body, I would see that stay open, be treated as a breakaway gap, and still try pressing that 4108. It's done so here, it's overlapped, that's fine. So now we have this PV array, the order block, and the gap here. So price would need to stay above that. Can it spike through it and touch the order high? Yes, but we want to see the bodies of the candles stay above this gap. That's order flow. That's how you stay at one side and read order flow. You don't need a ladder, depth of market, DOMs are not necessary. And if it were to break below that and start having the bodies below that, then it's problematic for continuing. It is for the initial session right now. It would be problematic in the near term for continuously moving higher. Dollar index is still just hammering around in a small little plate range. And look at the forex pairs. Euro dollar has traded up into a sell side down, plus side efficiency. That would, in my opinion, would be a short. You look at your euro dollar chart, 5 minute, 1025 candle, that's city. That we've already returned back up into. And it's too smooth on the lows at the 108.75 for euro dollar. And the sell side below 108.63 or 64. Dow's is still not joining the party. To that wick, midpoint of that wick, that's going approaching. They open there and look out for delivering. Now ES is the relative strength to the upside. Nasdaq is not joining this higher high. See that? It's not made a higher high. While ES has made a higher high. And Dow has yet to make the higher high here. So we're below still, relatively speaking, with the high formed at 10 o'clock, 10:01. Whereas in ES and Nasdaq, the 10 o'clock high here has been breached. Still no help by the dollar index, which makes these types of trade ideas anemic in my opinion. But it's a good study. Now I would want to see it if it's going to continue higher. You can do institutional order flow entry drill, which is just at that rate there. That should be the one higher rate there. If it's going to happen, it's going to do it there. Otherwise, it's going to start moving lower because dollar's wailing higher. Cable just dove lower. Euro dollar's diving lower. Right off the city I mentioned was a short. And dollar's raging higher. ES is probably going to lose some around here. And dollar's raging higher. Let's look at the ES real quick. So there you go. That's not a condition that makes easy longs for ES. Nasdaq slipping. So we have S&P divergence with a higher dollar. So this is play devil's advocate. Say I was long from the volume balance. Say I was long off of the high here. And say I didn't take a partial profit, or I didn't take 5 candles off. Cable was near lower low. Euro dollar's likely to make a low low. That's outside below that 108.64, 63 area, as I mentioned a little while ago. I would close the trade with all the things I mentioned, how cable broke lower, euro broke lower, dollar raised higher, and that would keep me from getting stopped out on a trade idea that would be long here. Just to see how it's important to look at all the other markets, because one market's going to be ahead of everything else. So when I'm managing risk on, risk off in my analysis, I'm looking at FX pairs, even though I'm not trading them, and I call these moves you're seeing now lower on the euro and cable, but I'm using it as an inter-market relationship. So I'm looking at other markets to give me insight as to what I would expect in price action, and we can see these reversals real time in the warning signs that are there in price. So that way you're not surprised by it. You're not looking at it thinking, well, why did that just happen? Because you're having to look at other markets, and I see other people that are pretending to be mentors, or they'll be highly critical of me and say, you don't need to do all these things. You don't need to look at the dollar. Just be a one market trader, one chart person. You're literally wearing blinders when you do that. Like, you have to have a complete view of what all the markets are doing, because one of those markets are going to be telltale, and it tips its hand to you. It tips its hand and shows you that it's now we are really risk on, risk off by watching the dollar index, which is about to make a higher high. So now we have. I would like to see this not filling that little area here. I hate that. I want to see that stay open. Don't go up there yet. Not yet. right, let's play the high risk game. We're going to suggest that this fair value gap right here, which is trading straight through rate, just back off. This one, just one tick above this candle's high, which is 104.50. So far we haven't seen that. We'll do solid match. I want to see it traded 104.51. That would be institutional order entry drill. And we'll look to see it trade down into sell side liquidity. There you go, that's the setup for the institutional order entry drill. It's high risk because we haven't had these lows taken out. The stop would be above the high here. Euro and cable are nicely lower. Dollars made a new higher high. NASDAQ is in its fair value gap. So if this is a trade that I would be in for real, I would have the least risk on. I would not be trying to pyramid it. I would not try to do a large position. It would be something very small and insignificant, just to participate in it. And the reason why I would be considering this at all is because we had such a reaction in cable, euro, and maybe not a forex trader. If you're looking at this kind of market here, we're using it for risk on risk off scenario. Dollar index is still higher. NASDAQ failed to make the higher high with ES. Dow has failed to make the higher high with ES. Dow has been the laggard all morning. And we don't really have the shift in market structure that I would have liked. But I'm just playing on the idea that this is an imbalance. We've already went to a premium. And I'm just watching it real time with you. So if I get stopped out, hypothetically, it's okay. It would communicate the idea that I'm telling you these are environments that I don't want to participate in. And it would communicate effectively why I don't want to do it. Like everything in here would suggest that this should go lower. At the very least, it should have at least made an attempt to get below here. And it hasn't done so yet. The wicks can color outside the lines. That's why I would say to stop. And I would demand that the market would break lower and create another new pattern below this low here. It shouldn't have any bodies outside of it. So that's indicative of a failure. It wouldn't be something I would be comfortable staying with. And I would have to anticipate this low being taken out. And any fair value gap would be considered a setup for the sell side here. So a loss, but less than the limited loss that a stop loss would have been implied by having it. Less than 3 handles of a hypothetical loss on the smallest position size that would be used on 3 contracts, in case you're wondering. So now, looking at it and understanding what you would anticipate, what we would want to see, but it doesn't deliver, what do we do with decisions that we make based on that information? When do you kill it? When do you abort the trade? How is it high probability? What is it in terms of low probability? We're not seeing things in alignment. This should have already went lower, and it hasn't done so. So if it's being reluctant to do that, you have to demand much more from it. This is that part where I can remember as a 20-year-old, I see it set up, I want to see it pan out. I would engage it. Then it doesn't perform like I want to. And then I would open the stop up larger, give it more room. Now let's just take devil's advocate for a moment and say I was my 20-year-old self, and I didn't collapse it or abort it at 3 points negative, or just below 3 points negative handles. And my stop would have been just above here initially, remember? Now let's just say, as a 20-year-old self, I would open the stop up larger, thinking that, okay, it needs to go back to this old high as resistance. That was my mentality, that was my thinking. So the stop would be elevated up to here, which does what? Offers up more opportunity for, if it's going to go higher, it's going to dig into that liquidity that will go above the high. So it would be a larger loss needlessly when it's already communicated to me that it shouldn't be doing what it's doing. The imbalance is here. That's colored in. The bodies here are telling you that it has unfinished business up here. So if you started with a short down here, and your stop is at that higher just one tick above it, as I hypothetically outlined, you don't have to sit there and take the full stop. There's a logic behind where you can kill the trade, where it's no longer a reliable setup, because the candles' bodies are doing what's in there with a full stop out. So you don't need to panic. You don't need to be fearful, but you do have to respect the measure of risk. And if you don't see the signatures and price action supporting your idea, you don't waste time and spend mental capital worrying about the trade setup. It's either going to be good or it's not. The trade immediately starts delivering for you, or it doesn't. And if it doesn't, that's problematic. Then by having that imbalanced framed, you start seeing a body like that right there's your first warning sign. And then you open up the next candle and you trade higher than that candle. That's it. You kill it. You don't hold the short from that point on. So what do? You wait, you move to the sidelines, and then when it goes higher like that, where it would have been an initial stop out, that would have been a full stop, you feel better about yourself because you've managed risk appropriately, and you're not reacting to price. You're reading price. You're letting it tell you the narrative and the story that it had unfinished business above here. Why? Because the imbalance should have kept the bodies inside of it, and it was unable to do so. So we're not taken by surprise. It just didn't pan out in a low probability condition. So all these things become much more impactful in your learning. So that way you're not guessing. You're not trying to pull things out of thin air and hopefully it pans out for you. And you're not worrying about getting stopped out. We're looking at the stop in relationship to what the price is delivering. And if it's outside these imbalances where we know, based on the concepts, the bodies are not permitted outside of it. The wicks are. As soon as we have a close outside of it, that's indicating that this is probably going to have to be revisited again. And if your stop loss is there on the short, and you don't see this, as I outlined in real time, you'll get a larger loss when it's not necessary. That's not necessary. Now, there's going to be some times when the market does go against me, and it just snaps and runs with stuff. There's nothing you can do about that. That's the reality of trading. You're going to have that. It's the cost of doing business. No one's perfect. You're not going to have 100% strike rate. And the stop has been paid. It's been paid to do its job, protect you from taking larger loss. Well, you still have that responsibility as a trader by watching price action. And this is why it's important to be listening to these boring parts, because you now have learned how to manage a stop loss. I purposely talked about how it was low probability, and this we're going to just play devil's advocate and say, okay, now let's just say this is what we see right now. Weakness across FX, strength in dollar, the S&P divergence across the indices. NASDAQ didn't support a higher high, what ES has. Let me pull it, the Dow real quick. So do we have 225? I'm sorry. I'm looking at the highs. 241 and 242. So one little point above it. So it did make a high there. NASDAQ. Not a higher high. ES slightly higher high. So I would want to see this, take this low out. I'm not interested in being long. So I would only look for this run below this low here. Any imbalance that creates a fair value gap, I would look for that as a setup going sell side put on. This imbalance will extend. So anyway, came back to what I was saying. As soon as we have that closing price here, outside of the imbalance that we would anticipate as real resistance, if the algorithm's allowing that candle to print and close outside of it, that's the warning sign that that stop is not safe. And you have time to abort it. Don't waste time worrying about it. Don't second guess it, because what's worse? Thinking it's likely to happen, and then it runs for your stop, and you have a full stop out, whatever the maximum risk was that trade idea with that stop would have entailed. Or seeing it, understanding that the probabilities have shifted so far away from you and not being in your favor anymore, neutralizing the position, taking a very, very small loss, a paper cut, and being correct by limiting the exposure of risk and not letting it take the full stop. The mindset that that provides you is it's easier and it's much more palatable for a trader to take a loss when they're doing it with the idea it's a smaller loss than it would have been if their stop loss get hit. Think about your development up this point right now and what you've been utilizing to trade with and how you've been taking losses. How many times have you been stopped out? How many times have you sat there and knew in your heart that this is probably going to stop you out, but you didn't have the gumptions? This is going in, close the trade. I don't want to take a full stop, and there's nothing wrong with it. Do it. You have to treat the same way that I teach you to take partials, because partials pay 100% of the time. There's never a partial profit ever that failed to make a profit. If you're in profit and you're taking some of the position that you have off, you're profiting. There's nothing wrong with that. No matter what anybody else tells you, that's a good thing. The same mindset you have to have equally with preserving equity and limiting risk. And the reasons why I teach these PDA rates and order flow and studying real-time tape reading, you'll be able to see when the positions that you are in, and you have defined risk as you should with a stop loss always, there's no necessity for you to hold that full stop when you now have indications being presented to you in the delivery price that it's telling you your stop is now in jeopardy. So you can say, okay, this trade idea, I was looking for it to go lower, knowing it's low probability, but your trade should be set up in a low probability condition, should be high probability. But to push the envelope and show you, okay, let's play devil's advocate, we're going to use this as a short idea, and hypothetical stop would be at the old high there. I taught you exactly when to abort the trade. Exactly when it's no longer viable. You should never feel bad about aborting a trade and preserving a full stop out. But unfortunately, as a new trader, you're resisting that experience by letting your full stop out occur or opening the stop to a larger stop loss, which are both detrimental to your development and longevity as a trader. So you have to have a reason to know the trade's no longer viable. Do you have that? If you don't have that, this year you're learning how to do that. These PDA rates, the things I'm teaching you, the imbalances, the liquidity, they have a dance between them. And when they don't agree, do not allow full stop loss. Just close it. I promise you, what you're trying to avoid, which is losses, you want to be comfortable taking small losses and knowing that you did the right thing by taking a small loss, then allowing it to be a larger full stop out. And you'll feel empowered because of that. All right, so immediately, this thing looks like it wants to go one more time higher on ES. We might get that 109 level on the volume balance that I was showing you earlier. This is a really, really difficult market to trust because the things I lean on for support behind the ideas, they're not materializing in the other markets, which again defines my version of a low probability. And these types of moves, when they do form, I will not be participants of it. They'll move without me and it's fine. But getting back to the mitigating loss, reducing the overall exposure risk, that is a paramount issue for your continued success or ever eventual success. In the beginning, you're afraid to take that first losing trade. Let's say you get funded. Say you fund a wide account. You're going to be so terrified to take that first trade because you don't want it to start off on the wrong foot, a losing trade. So the smallest amount of leverage that you can put on with, put a quarter. If it's heads, you buy. If it's tails, you sell short. Go in and let chance be the first thing. If it's a losing trade, who cares? You didn't make that decision. You can't feel bad about it. But it breaks the ice. It's all it is. It's an icebreaker. If you're so paralyzed with it, just accept the fact that you get some kind of instigation that's outside of your own decision making. That way you can't be blamed emotionally, psychologically if it's a losing trade on the first one. So now you broke the ice. Now you're in there. If it wins, you can't attribute it to skill because you did something outside of yourself. That first trade is behind you now. You're not paralyzed at the deer in headlights. But you're trying to avoid losing. As a student that starts learning how to do this, whether it's under me or anywhere else, your number one fear is doing it wrong and losing money. And that's, well, it's something to be mindful of because nobody really wants to go out here and try to lose money. But you can't allow it to paralyze you where you can't make clear decisions about what it is you're doing with risk. Risk has to be assumed. There's no way to do this industry and not assume risk. There's always risk. That's why the disclaimers are always there. That's why you're constantly bombarded with you can lose more than you have, and previous experience and outcomes and results are not indicative of future results. So you know that subconsciously, and you also know the times when you were looking at price action and didn't do what you thought it was going to do. And that would have materialized as a losing trade, but you'll filter that out. You'll pretend that never happened, like you didn't see it, but you really did. And your subconscious knows that. You may be making no mental note of it, but subconsciously, your emotions and your psyche is remembering that as that's something that triggered you, but you're trying to block it out. And then when you start trading with real money, this is the chemistry behind why it's difficult for you. You may do it really, really well in a demo or paper trading. Then when you go to a live account, real risk setting, all the things that you did wrong, not practicing properly, not managing risk, you have not conditioned yourself or desensitized yourself to doing it wrong and not being tore up because of it. You're going to do it wrong. Everybody that's going to ever trade in the future will do it wrong. I will do it wrong. You'll do it wrong. But how much skin is going to come off of that? How much flesh is going to be removed from you? How much equity is it going to consume? You have control over that. So if you look at these things and you use them as milestones for intellect, like a winning trade or a series of winning trades means you're smart. It doesn't mean you're smart. It just means that you made the right decisions at that time under those current circumstances. But the risk has to be defined all the time. And that initial risk is not limited to that's all it's going to be. You can find ways to limit that even less. But you have to look at price action. You can't just marry the idea because you're not in a trade, and you just can't bring yourself to take a losing trade. Because what happens if I get out of it and it moves in my favor? Well, what happens when you don't listen to the logic I'm teaching you, and it smokes you every single time at maximum loss? Every time you offer up risk to the marketplace, it's going to take it. If you're offside, it means you're in the wrong direction of the market, and you have stop loss that's allowing them to take that. You are liquidity, and they will consume you. So when I teach price action, it's important to note that these rules are there for you to learn from, and also to trust over time. But you can't trust it unless you're in here doing these exercises where you're watching it real time. And not being afraid of it, not painting in your favor. You need to experience that. How are you going to react to that? And journal that. Are you frustrated because even though you were just tape reading it, it didn't pan out? And how does it make you feel? What's your chemistry like at that moment? Are you hopped up and you're just angry? Now you want to vent? Do you want to go online and complain? Do you doubt the concepts? Do you doubt yourself ever learning how to do this because of that? All those things are 109, 150 level. And dollar index is still hanging around near its highs. So now go back to that 20-year-old ICT, right? Remember I would open my stop up larger. That's right there would have been a larger loss. Not reading what I've learned later in life. It told me that this is not going to be a good idea. So kill it before it gets there. So how can someone look at that and think that's not a good idea to learn? The books don't teach that. Here's a stop, accept the risks. If you get stopped out, okay, trade your plan your trade, and stick to your game plan. Well, the game plan is not to lose as much money. And if you have a way, a mechanism that helps you limit that, then you should do it. So I do believe these mugs want to take this up to 12, 4112, 4113. It's 2 standard deviations on this one here. I'm going to show you. Do you see how the 19 level, which is negative 3.5 on this price line, is inside that shaded area, which is the daily volume bounds, and the 41.18.5 just falls short of it? There's a lot of things converging around that daily volume bound. So at this point, as long as we stay above this here into the afternoon, this is where I think we'll go. The only thing that changes that is trading below this level here. So now I've written out the afternoon bias for you and what would be necessary for those things to be true for me as an analyst. Do you see how the 19 level, which is negative 3.5 on this price line, is inside that shaded area, which is the daily volume bounds, and the 41.18.5 just falls short of it? There's a lot of things converging around that daily volume bound. So at this point, as long as we stay above this here into the afternoon, this is where I think we'll go. The only thing that changes that is trading below this level here. So now I've written out the afternoon bias for you and what would be necessary for those things to be true for me as an analyst. So I forced myself into a condition that is not low probability. I framed the arguments against it, and I'll show you real quick again. Here is the NASDAQ. Lower high. This one here, you can trade this one to catch up with what the ES has done. So let's just say hypothetically, you would have been right there at that candle's open. That would be your long entry. Okay. The idea is that that's an order block. You can trade inside of the range of that candle. You don't need to go away and come back. If you're expecting to expand inside that candle, on the candle that's painting, like when this was forming, you can be a long entry there. By doing that, so let's just say hypothetically, you would have been right there at. I'll show you real quick again. Here is the NASDAQ. Lower high. This one here, you can trade this one to catch up with what the ES has done. So let's just say hypothetically, you would have been right there at that candle's open. That would be your long entry. Okay. The idea is that that's an order block. You can trade inside of the range of that candle. You don't need to go away and come back. If you're expecting to expand inside that candle, on the candle that's painting, like when this was forming, you can be a long entry there. By doing that, or not by doing it, but by understanding that, then you can go back and look at my other examples when I'm trading live and you see me doing executions. Then I'm noting the candle that it's the order block. You're looking at that thinking, why did you enter there? Because you're inside of the order block. I'm anticipating that change in state of delivery, but the opening price, you don't need to come back because it might not do that. Especially since we have ES doing what? Expanding higher, reaching for the 41.19.5, that high on March 6th. Okay, so right away from the opening price on this candle at 184 even, that would be hypothetical entry as was trading here. 184, and now we're at most likely 200, so 16 ticks almost. Hasn't quite printed yet. not that I'm a NASDAQ trader, obviously I can trade it, but that would be the equivalent of what would be an ES run using the SICK sister approach. Okay, I'll say it again, the SICK, S-I-C-K, sister approach, where you see price moving in ES. This one's leading. So you go back to looking at the 13 level I mentioned a moment ago. There's 5 handles there, but we're going to go back to NASDAQ because that was one of those key live. This one here hasn't taken out the high yet. Let me show you. Okay, so while we're in this candle, this black candle here, down close candle is an order block. At the opening price, when we're trading down here, go back and watch the recording, you'll see it's like this. You'd be going long here. I said you can go long here and use this one because this is the market that's going to try to catch up with ES. Meaning what? ES has done this already. It's already made a higher high. This high here, that high is this high here on NASDAQ. That's this high. And right here, it hadn't taken that high out yet. So this is called the SICK sister approach, where everything is pushing higher. This pair, or this market rather, it can be done in Forex, by the way. And you could use it like, say, for instance, this is the British pound, and say the ES is your dollar. Same thing applied to Forex. One's already moved. So by sympathy, this market will want to catch up with and erase the SMT divergence that was being there. So live, entering here, with the expectation it would catch up and move in sympathy with what ES has done. Think about what we just did. I gave you devil's advocate situation where I already knew it was low probability. I framed the fair value gap. I told you where the hypothetical stop loss would be. And then it traded outside of that fair value gap, and it closed with its body on ES. And I said, okay, the next candle, it traded higher than the next candle that were just formed. We go back to ES, that what you know what I'm talking about. This candle was the first warning sign that that stop would have been in jeopardy. As soon as this candle opened and traded above this high, that's it, you're done. You kill the trade. It's over. That loss that was now small has to be mitigated. We're watching price deliver here. We want to gravitate through the 4119 level, as I indicated by having all the confluences and that volume bounce up here. So if that's true, and the NASDAQ at the time when we were looking at it, on this candle right there, right here, inside of the range of that down close candle, you can be a buyer, and I gave you the opening price as a hypothetical entry. That was your fill. Okay, if you want to use the high of that candle to be even more fair, your fill would be 84.50. Okay, 84.50, and we traded to a high of 98. So almost 15 ticks. So the loss that would have been reduced by protecting the full stop out in ES would have been completely eradicated with this move here in NASDAQ, using the SICK sister approach, where you're using the market that has yet to catch up with the one that's leading. And many times I've used this in Forex, and you can see now how it's used real time here with the ES and NASDAQ. Now because we had a high here, this imbalance right here, this would need to be supported. So price would need to have no willingness to close a body below that. We can whip through it and get into this little imbalance, but I want to see the body close inside this or above it. Otherwise it's probably done. For the morning we'll go into lunch hour. I'd be lying if I said I wasn't going to miss doing this next week. I think I'm enjoying it. Never thought you learned so much about how to make money, right? This is how you get there. You gotta remove all the concern about losing money and making money. Learn to read price action. There's so much that you don't know that's required to be profitable consistently. So we'll come back to this one, let this one cook a little bit. I don't want to see a closing price. Let me change my setting on my monitor here so I can watch it, in case it does. Let me mention it to you live, and not have that on the screen. Okay. Yes. Alright, so we have order block. So when we look at order block, it's mean threshold, which is half of the range. So I'm just going to eyeball it. This is what I usually do most of the time anyway. So I'm looking at that level right there. Okay, that level plus the volume balance and the fair value gap. So there's your 3 PD arrays. You don't want to see any closing body below mean threshold. As long as it doesn't do that, we look for 4119, 4119.50. Not for a trade, because we're too far in the premium now. We're too far up near the target. So because we're in a change of the session. Now folks, listen, this is one of those things you want to be writing down. We don't use this as an entry. This would be the idea that assuming that we're long. We're watching and managing the position. We want to see does the price continuously give us the signatures that we would look for delivering price in our direction. So these three discount arrays are inside of the premium range right before we get to our target. So this is our target up here, and the inception of the move is down here in the volume balance. We're in the upper portion of it. So we don't want to add anything, we don't pyramid in that portion. So we have to just manage the trade idea. And now we have 1, 2, and the volume, fair value gap here that's already traded into. Now we're in the volume balance. And in the mean threshold that order block, that has to be supported the price. If it trades and closes a body below that, that's problematic. Then you have to take something off the trade, reduce the leverage that you have open. And that's the only time I give permission to a student to take something off when the trade's moving against you while still being in profit. In other words, you're having open profits erode as it's going down in here. But just like I was teaching a little while ago about when you want to kill the trade or avoid it, when it no longer makes sense, you're closing the trade before it hits your stop, but you're closing the trade while it's taking more from you. But you're limiting how much it is. Well, in this case, it's taking open profits that's unrealized while it's retracing against you if you're hypothetically long back here or in here. So you can't look at it as, well, I can't take a partial off now because I'm doing it when it's going against me. But you have to do that if it closes below the mean threshold of this order block. Because it might be indicating to you what? It's going to come back on your stop, which may be trailed. It may not be trailed. Regardless, you want to reduce the leverage, reduce the exposure, the risk, because it's indicating that we are possibly either consolidating or retracing, and it's Friday, and we're transitioning from the morning session into what? The lunch hour, where stops usually get rolled against. In other words, who's been making money this morning? The longs. So where's their stop loss? During the lunch hour, or just after it, the typical performance and prices, it usually rolls against the liquidity that was raised up during the morning move higher. And either it goes for them and continues lower, or it goes against it, hits that liquidity and then continues going higher. Either way, it's likely to run against the sell side, because we've seen delivery on the upside all morning. Does that make sense? The fact that we don't want to be buying up here in a premium relative to our target. We're using discount arrays to filter out the willingness of price. Does it want to go higher? Does it keep giving us indications that it wants to go higher? I use 3 PD arrays to do that. The most immediate PD array relative to market price, which is right now where we are at, right here, the volume imbalance, the fair value gap, and the mean threshold of that down close candle, which is the order block. That's the last line of defense. So far, we're seeing short-term support offered by the volume imbalance. Dollar index, just not doing too much in here. I would love to learn how to abort a trade and not let my stop loss get hit when I was 20 years old. These are things that I wanted to find in books when I was buying them. Teach me how to do that. Teach me when the trade's no longer good. Books never talk about that, and it's very frustrating, especially as a new trader. You trust the authors that wrote these things, and then because you only have the get me into a trade ideas given to you, which is the least important thing, the understanding of what makes a trade less probable. When do you get into a trade that looks high probability, and when does it change from high probability to it's not likely to pan out? What are those factors? What are those things that leads to that occurring? So that way you as a trader can use that analysis concept to mitigate unnecessary stop outs at full risk or abort the trade before it turns into a losing trade. Those topics, they're just not available, and it was a very serious point of frustration for me. So I had to go in here and just make up my own rules as I went. What do I do? How did I lose? What caused me to go into a downward spiral and caused me to blow my account? What were those things I was thinking about? What was I fearful of? What was I overconfident about? But then price told me that wasn't likely. What were those things that keep happening? That's what I did. And that's the language I'm teaching you. All these core content lessons for my private mentorship, that's the language. That's not mentorship. This, what I'm doing with you right here, that's mentoring. Now imagine you have been waiting for me to do a mentorship, and you paid. You're in there, and you're watching something like this. As a new person, you're thinking, you should be telling me to get into good trades, like it's a signal service. No. I'm teaching you how to read price, so that way you can do this on your own and navigate it and not feel the tug of war, the emotional and psychological impacts of being right or wrong, being confused, needing to wait for more information. All of that brings to the table as a trader. And knowing what you're supposed to do, how you're supposed to think, how you're supposed to react to what you're seeing in price action as it relates to you as a trader, not reacting to price for trades. You have to make the reaction to what the indications of these price movements are telling you. You can't stick with a trade when I'm teaching you the signatures are telling you it's no longer good. If it's doing that, it's indicating to you that it's problematic now. It's not likely to pan out. So what do? You either abort the trade or take KF off. That was something for your journal, by the way. It's not the first time I mentioned it. But when you have 3 PD arrays break that were supposed to be supportive, probable. When do you get into a trade that looks high probability, and when does it change from high probability to it's not likely to pan out? What are those factors? What are those things that leads to that occurring? So that way you as a trader can use that analysis concept to mitigate unnecessary stop outs at full risk or abort the trade before it turns into a losing trade. Those topics, they're just not available, and it was a very serious point of frustration for me. So I had to go in here and just make up my own rules as I went. What do I do? How did I lose? What caused me to go into a downward spiral and caused me to blow my account? What were those things I was thinking about? What was I fearful of? What was I overconfident about? But then price told me that wasn't likely. What were those things that keep happening? That's what I did. And that's the language I'm teaching you. All those core content lessons for my private mentorship, that's the language. That's not mentorship. This, what I'm doing with you right here, that's mentoring. Now imagine you have been waiting for me to do a mentorship, and you paid. You're in there, and you're watching something like this. As a new person, you're thinking, you should be telling me to get into the trades, like it's a signal service. No. I'm teaching you how to read price, so that way you can do this on your own and navigate it and not feel the tug of war, the emotional and psychological impacts of being right or wrong, being confused, needing to wait for more information. All of that brings to the table as a trader. And knowing what you're supposed to do, how you're supposed to think, how you're supposed to react to what you're seeing in price action as it relates to you as a trader, not reacting to price for trades. You have to make the reaction to what the indications of these price movements are telling you. You can't stick with a trade when I'm teaching you the signatures are telling you it's no longer good. If it's doing that, it's indicating to you that it's problematic now. It's not likely to pan out. So what do? You either abort the trade or take KF off. That was something for your journal, by the way. It's not the first time I mentioned it. But when you have 3 PD arrays break that were supposed to be supportive for your trade, if they break, that's the clearest indication that you're probably in a reversal and you just don't have the experience yet to see it. And there's going to be times when you do that and it turns around and keeps going in your favor, but you don't have the experience to know that's going to occur, which is the reason why I give that rule-based idea to my students. In the early stages, you don't have the experience, which is something that has to be acquired on your own. I can't write a book, I can't do a video, nobody else can do it either, that gives you that experience. That experience has to be earned. You work for it. And a lot of lazy students came to me and would see things like, this is how I was teaching. This is how I was doing mentorship. I was talking about things and making you understand this is what it's going to feel like to be doing it. And sometimes the price isn't going to do what you want it to do. How are you going to perform as the trader? What are you going to do with that? How are you going to manage the risk? How are you going to stay with the trade, if at all? What are those defining moments in price action so that way you're not caught off guard, you're not surprised. So that way you're relaxed. You're just listening to what these candlesticks are telling you. The only time that you should be shocked or taken back. It says some violent thing comes in where the market just does some crazy ass up down move, something, some war event, some kind of terrorist attack, that type of thing, where nobody can see that coming. And then boom, there's all kinds of shock and awe in price action. You can't avoid that. Nobody can. That's the inherent risks of trading. And your stop loss might not even do its job in those instances. You know that that's likely to happen. When you sign up and start with a brokerage, whether you deal with a funded account, I don't know what the risk disclaimers are. I don't even think there is any risk disclaimers you sign for that. I think it's just you pay and you're in there, I guess. I don't know. But when you open up with a regulated broker, you're signing documents stating that, liquidity may not be there for you. And you may lose more than you have. Meaning what you have in your account balance and also what you have at risk per stop loss. That's a scary thing when you really take consideration to what that means. And we're in these black swan events right now or not events, but in a climate where a black swan event can happen. Something unforeseen by the general public comes out and attacked. Think of like September 11th. That occurred before the market opened up that day. If it would have happened during the market hours, that would have caused all kinds of fluctuations. Maybe not the first plane hitting, but the second plane, boom, that would have been obvious. Because I watched that second one hit live. And I was taken back. Like I was frozen in fear, standing right in my living room. And I couldn't believe what I just watched. That would have caused all kinds of chaos in the marketplace. Like it would have been amazing to see it. But all these things happened before the market opened up. And they kept the market closed for several days. So barring those types of things, we're not surprised. We're not surprised, we're not shocked, we're not scared, we're not overreacting to a price move. We're reading price. We're just watching it. And it's going to either tell you a story that makes sense for you to position yourself and assume risk or not. Or once you're in it and you have assumed risk, it's going to tell you this is no longer something you should be a part of. Take half of it. If you still feel convictions to hold on to it, take half of it off. That way, even if it does run on you and take your stop loss, you did not give it everything that you made available to in terms of taking a full stop out. But in the beginning, as a new student, that doesn't make any sense because you got into this to make money. Not get half position off, because what if you're wrong and it goes in your favor? And I listen to this dumb rule that ICT's talking about. Hello. The chances of you knowing when that's true and when it's not true as a new trader is next to zero. So I've built in, with this language of teaching how to read price action, I've taught my students to look for these protocols and follow them systematically, unattached to the outcome of the trade. You have to have these rule-based ideas, because if you don't, you will react to price. You will get scared out of the little fluctuations that occur. It'll change your entire mind and scope of what you think the price is going to do for that particular setting, that session, that day. And it's probably 1 minute candle that changed your whole view because you don't have the experience of reading price. You haven't been here before. And you can't say, well, I watched a couple of your videos and I looked at, last week I saw price for about 20 minutes, 2 times that week. So I got experience. That's the argument some of my paid students would give me. I wrote some notes down. Look at my pages. It's 10 pages of useless information. There's things, they're not the heavy-hitting things. The things I'm talking about in this live session, they're paramount. But they're not sexy topics. They're not something that, if I made a video entitled it that way, that would be one of the least viewed videos in my entire library on that channel. Why? Because it's talking about a topic that's not sexy. You would be watching, if I almost had been tempted to do this, do a series of videos titled Amazing Profit Strategy, High Rate Bank Strategy. I bet you that would be viral. I'd have 100,000 views in one day. In one day. Not the typical 55 to 60,000 views that I get. But these are the lessons that someone that's been doing it for a long time has learned. It has guided me into the position where I am now. I have the experience that I can convey it before it happens. I can see when the market's going to be difficult for me. I can anticipate when that's going to be. And that's a skill set that you want to acquire. But you acquire it by tape reading, not taking trades, and studying price. Allowing these candlesticks to give you the experience that you're looking for. But most people don't want to do that because they want to get right out there and start making money. They want to get withdrawals, do their funded account stuff, and be able to show their certificates and stuff. You're doing it for the wrong reasons. You're doing all that stuff for the wrong reasons, which is exactly what my son's doing right now. He's trying to rush it. He wants to be able to say, look at this. So you're trading with a certificate as the goal versus learning how to trade, be highly precise, be selective, highly selective of your setups, and stick to a model that's within the context of present order flow. Is it bullish or is it bearish? And operate under those pretenses only. Not, I want to get this certificate. I want to be able to say I passed this funded challenge. Think, is that you? Are you doing this for all the wrong reasons? Because I promise you, you probably are. Instead of saying, I want to be very precise about what I'm doing. Calculated. Nothing's going to bother me. I want to be completely bored by what I'm looking at and anticipate these things. And if I can't see them coming, I'm not interested. Because if you're going to react to it, then, well, you're going to be at the mercy of your emotions. And whatever the result has been on your last trade, that's going to be the deciding factor of how you're going to think and feel in your next trade. And if it was unprofitable, or you had to close it with a smaller loss and protect your stop loss, that's not going to feel good for the next trade. You're going to be second-guessing yourself, second-guessing the concepts, the day, the model, everything. And they're going to be perfect little distractions, perfect little excuses to say, it wasn't my fault, it was something outside of me.
And you have to own all that stuff. You have to be responsible about everything you're doing. All the ideas, no one's giving you the idea to push the button. No one's forcing you to collapse the trade. But you have to have rules and ideas that help you manage those decisions. Because when these markets are moving fast, and this ain't a fast market, it's like watching paint dry and grass grow. I don't like these conditions. I don't like it. I'm used to waiting for environments that are very quick, very sudden movements, and I want to trade in those environments. But to properly mentor you, you have to be here seeing this. You have to have your nose in the charts, feeling like you could be doing something else better right now. I'll watch this video later on when I have extra time. You're gonna fail. I promise you're gonna fail, because you're gonna have so much hope built up around the hype. It's my concepts right now. Everybody's talking about it, using it, and it's in YouTube everywhere. And I'm honored. Don't get me wrong. I'm honored by that. But too many times, it's this hype train around the idea, but not knowing the concepts, logic, that makes it even work. That's why I'm offended when I see people pretend they really know what they're talking about. They don't. They absolutely have no idea what they're talking about. And you end up doing more harm to the people that would be learning this properly, and you close their mind to the whole idea that it's useful information, because you are talking about something that you don't fully understand. And your idea about what you think you've understood by watching my video or watching me talk about something, and you want to dilute it because the attention span of most people in trading is the attention span of a gnat. I'm sorry, but this can't be learned through TikTok. Okay? Give me 30-second viral little pieces of information. That's all I need. Get to the point. The point is you're going to fail. If that's your mindset, that's your mentality, you're going to fail. I promise you, I guarantee you're going to fail. Absolutely guaranteed it's going to happen. Because you're trying to do something. Shortcuts. And shortcuts don't exist in this. It doesn't work like that. It's just like weight training and dieting and doing anything else worth doing. It's going to take time. It's going to be more time than you thought it was going to be. And you have to be disciplined. You have to be responsible. And that means following rules. And inherently, human beings don't like to follow rules. And it was not easy for me to do that either. I had to come up with these rules. And I had to power through the times that I didn't want to listen. And I still blew that account. Knowing the rules that I did not listen, that I had already put in place, I said, no, I'm going to think outside the box here. And wreck. Those are painful lessons. And they're needless lessons to go through. You don't have to have that experience. If you listen to me, you can spare yourself all that and have all the upside potential learning curve minimized by not putting a time limit on, I have to understand this by this much time. But ICT, you're scaring the hell out of me with all this stuff you're talking about that's coming. You can't change it. You can't speed it up to be prepared for it. You have to do these things every day. And over time, it'll condition you and you'll see it. You'll understand more. Yeah, 41.19, 41.1950. That looks like it's a dealable level today. Dollar index is slipping off. We're just trading at that 102.36 level. That's that fair value gap I mentioned earlier in the live stream. String up here, and I would use that as a sell, targeting the sell type like here and here. So go back and watch that video. You can go back and look at the logic in here, look through your time frames, and you'll see the dollar index was correcting higher.
That's a nice 2022 model.
Cable. Similar. Sell side. This one here, I didn't like this one so much. There's a lot of this back and forth stuff that we had at.
It's a very nice
here.
displacement leg.
Preached. Fair value gap. Displacement the sell side. So the silver bullet trade is here for cable, and it's here for euro dollar. Here's the imbalance I mentioned, and here's the return back to it at 1040. Sell off, sell side. Go back and listen to the recording. This is the first target, and then down here. So that's all in this live stream. I'll get into you live. ES has been a bit of a bitch.
Whoa.
It wants to get up here. So you can't fight these kind of moves. It's frustrating. You have to either submit to it or don't trade. Go back to 4 minute. 3, 2, 1.
Well, there, Michael.
So you can see how the volume imbalance in here supported price. Fair value gap also supported price, and we didn't need to come back down into the order block. So we're going into the noon hour. Most time I want to see it expand up and just bang that 41.19 level, and that'll be a closure for today for me. Now sell side has moved to here. Volume bounce right here. This is boring ICT. Then you're on the right track. You're on the right track. Because you will not be able to do this on your own until it's boring. You're not going to be influenced by the outcome, the potential profitability, or potential losing. You're indifferent to the outcome. It's the right mindset. Every time you put a trade on, it's an experiment. You're observing, does it do what you think it should do? And you observe and you submit to the time that it takes for that to occur. All right, so we had a higher high here going into the lunch hour after consolidation. So this is where you want to go through, cycling through your indices. Lower high, that's problematic. NASDAQ. Yeah, higher high, but I would prefer to see this staying. Remember I was telling you that? I would like to see the bodies stay inside that. So it went lower, trade down to an order block in this gap here, but I would have rather seen that stay inside here. Back to ES. Let's see this volume balance here. We want to see price respect that. It can wick down into this one, but not close a body below it now. This one here. So let's do this. Change the color of that one. So I don't have these drawn on my chart, obviously. This is very distracting for me to teach you like this, but you need these visual aids to see what I'm looking at, where my attention is. Over time, you won't have them on your chart either. But in the beginning, it's important for you to note them because you're going to log them. And having examples like this, referring back to old moves where you've watched this and screenshot it, and all these instances where price does these things, I'm teaching you that you should respect and how they should deliver. By having lots of examples of them, you will feel much more confident when you're watching real-time price action because your subconscious remembers all the things that you're celebrating as experiences in your journal. So you want to make that journal very high energy positive all the time because it means it's going to mean something to you. Just like when you buy your new car and when you drive off the lot, you think you had bought the car everybody else now owns. When you like the car, yeah, but now because you bought it, you've anchored it to something much more emotional to you. It's meaningful to you. So you want to treat all of the things in your journal much in the same way. You want to make it a positive experience. So everything you look at in there is going to be keying up your reticular activating system. And that means that your eye, when you're watching real-time price action, you'll see these things real time. Whereas right now, you may not have noticed the volume imbalances. You may not have noticed the fair value gaps that I'm pulling out. But you're seeing them done real time. And you're watching the reaction of price afterwards. So we're anticipating, we're not reacting to price. We're anticipating what price is going to do. And in the beginning, you're going to do everything wrong. And you're going to feel like you're not learning. And that's normal. But you want to record in your journal like you saw these things happening before the fact. It was amazing to see this pan out as I expected. And you're tricking your subconscious into thinking that you had that experience for real. It's positive self-talk. It's just like if you were having an anxiety attack, you're telling yourself, there's no reason to be afraid. There's no reason to be concerned. There's no emergency. There may have been something that triggered it. But the way you talk yourself down, you're feeding yourself positive reinforcements, these things that need to be positive in your journal. If you don't do that in your journal and you talk about how this sucks, another losing week, another losing day, I'm never going to get this crap, this is effing garbage, whatever the toxicity is that you feel like you want to put in there, don't. Replace it with something that you feel good about. Even if you have to find it in hindsight, that is going to be remembered by your subconscious. So when you're watching price action, your brain will see these things just like your car when you buy it. You're going down the road, you're not really looking for your car because you're in it. But then your eye jumps to, oh, I just bought this Jeep. It's got all the customizations, and this guy or this gal, she just bought the same thing. Man, because you think you have the only one like it. Well, in reality, your journal is that very thing. It's the only one like it. It's the best trading book that was ever written, and you're the author. That's amazing, because these things are going to be much more impactful to you. They're not going to be all that meaningful to someone else if they read it. This is your journey. This is what you've been working and striving for. And it's full of the best cheerleading ever that is impactful and meaningful to you. So when you do your journaling and you annotate your charts, you record the observations that you're seeing in price action as if you saw it beforehand. And the way it works is that you see this and you study your journal on the weekends, look at price action moves in relationship to learning, and that's normal. But you want to record in your journal like you saw these things happening before the fact. It was amazing to see this pan out as I expected, and you're tricking your subconscious into thinking that you had that experience for real. It's positive self-talk. It's just like if you were having an anxiety attack, you're telling yourself, there's no reason to be afraid. There's no reason to be concerned. There's no emergency. There may have been something that triggered it. But the way you talk yourself down, you're feeding yourself positive reinforcements, these things that need to be positive in your journal. If you don't do that in your journal and you talk about how this sucks, another losing week, another losing day, I'm never going to get this crap, this is effing garbage, whatever the toxicity is that you feel like you want to put in there, don't. Replace it with something that you feel good about. Even if you have to find it in hindsight, that is going to be remembered by your subconscious. So when you're watching price action, your brain will see these things just like your car when you buy it. You're going down the road, you're not really looking for your car because you're in it. But then your eye jumps to, oh, I just bought this Jeep. It's got all the customizations, and this guy or this gal just bought the same thing. Man, because you think you have the only one like it. Well, in reality, your journal is that very thing. It's the only one like it. It's the best trading book that was ever written, and you're the author. That's amazing, because these things are going to be much more impactful to you. They're not going to be all that meaningful to someone else if they read it, but to you, it means a lot. This is your journey. This is what you've been working and striving for, and it's full of the best cheerleading ever that is impactful and meaningful to you. So when you do your journaling and you annotate your charts, you record the observations that you're seeing in price action as if you saw it beforehand. And the way it works is that you see this and you study your journal on the weekends, look at price action moves in relationship to how the week closed, and go back and look at your screenshots and what you were recording in your observations on that particular session, that particular day, and how it fits in the grand scheme of the entire week. And over time doing that, you're building pseudo experience that will feel like experience that's been acquired over years when you start looking at real-time price data. And you forecast over the tape what you think you should see in price. How should it behave? Should it find support at this level? Should it gravitate to this level? Should it not do a specific thing? How should it behave? The rules that I'm teaching you are those ideas, but you have to submit to them. But you also have to do the work of recording annotations in old moves, screenshot them, even if you weren't able to watch it live. But you record all that stuff real positive, like supporting your view on like you were there, like we're watching all this stuff real time here. You recorded, hey, I saw price action do this live, and it was such a rewarding experience to see it pan out to script. Now you may not have had that very thing in mind when you were looking at it on your phone at work. You had no idea what was happening, but when you get home from work, or you come home from school, or you wake up because the market traded when you were sleeping, then you record it like you did see it, and it tricks your brain. It gives you a head start in experience, and you're filtering out all the negative things, which everybody does this in the beginning. They talk themselves out of doing this. They scare themselves. They talk themselves out of, oh, I'll never learn this stuff. It's too complicated. It's too hard. It's too many rules. How do I know when to do this? How do I know to do that? It seems like all these things are changing all the time. The goalpost is moving all the time. It's not. It's just you're trying to anticipate, well, not anticipate, you're trying to accelerate the learning curve when time is necessary. And how much time is going to be unique to each one of you. But you have to give yourself permission to require whatever that time is and submit to it. So we have almost 5 handles from this volume of balance from here, gravitating towards that 41.19. See how we open on this candle and fill in that little gap to the body of that one? I want to see this candle or the next one running to that 41.19.
Down here we have volume balance. I mentioned real time. I talked about the fair value. Let me draw it so that way you can see the three that were there at the time, so you can get an idea what your journal should look like. Man, I wish I had this when I was coming up. This would have been such a huge help to me. I would have been looking at things a whole lot different. I would have been much more disciplined about how I studied. Okay, so you have volume balance, fair value gap, and mean threshold order block. There's your three PDA arrays. You never breached any of that. So all of this here, every time you see the market trade above a short-term high, it's indicating what order flow is bullish. If it drops back down into any discount arrays, you can accumulate a long position if you're not in a premium range of where you're targeting. But because you would be in a trade hypothetically back here somewhere, you have to trade your position and manage it with this logic. I know some of you are like, I'm using this. This makes perfect sense. I'm going to use this as my model. You're going to get hurt because you're going to be trying to trade in the premium areas when we're getting transition to lunch. And we're already rich in terms of the premium. And you're going to get retracements that run against liquidity. And there might be times like it does here. It pings out nicely. But usually, this time of day, you'll see it come back on the stops that hadn't been traded to and punish the people that have been trying to profit going higher. Take a look at the NASDAQ real quick. Okay, down. Remember that mitigation block back here? Look how we activate. That's how you know who knows what. Yes. Now sell side has been raised to here. So from 41.13 to 18, that's 5 handles. Volume balance from here. Here's a high comes in 18. Volume balance. So you want to screenshot that, and but you can use on chart right here. For instance, as an example. Over here you annotate that the market has shown willingness to go higher towards the daily volume balance, which is the shaded area up here. That's what this is up here. That pink shaded area. And the old high at March 16. I'm sorry, March 6, 2023. That's at this level, is the 119.50 level. And you annotate that as you saw this coming, you watched it live, so you really aren't lying about that because you did see it, but I told you to watch it. And it delivered an offer 5 handles going towards a level that we were looking for, 41.19, 41.19.50, that daily volume balance. And if it accelerates to the upside, go to your daily chart on ES and look at the February 16th of 2023. That is a city, sell side balance, buy side efficiency. And you want to have that annotated on your chart using the low of February 15th and anchoring your rectangle to the high of February 17th, and then extend that going into the future. That would be if we get above the volume imbalance that is formed on the date of February 17th and February 21st. That volume imbalance on the daily chart. If we get above that, and then we have that. There you go. That's essentially the 16th of February on your daily chart for ES. I'm interested to see how we trade at 41.19.50 or above, because this has been a long run up, all one sided each day since Tuesday. So that's taking on an old daily high. So I'm going to get a lot of reaction once we get above that. It seems boring when you're going through it, but when you look after the fact and see what's on the chart that we were looking at and annotating live, it gives you a different perspective versus if you're just watching it and you're just very highly critical. You're not trying to learn, you just look for something to complain about and say, why didn't you do this, why didn't you do that? Instead of asking why didn't you do this and why didn't you do that, reason with yourself and reflect on the things I pointed out in the chart as it's happening. It seems boring when you're going through it, but when you look after the fact and see what's on the chart that we were looking at and annotating live, it gives you a different perspective versus if you're just watching it and you're just very highly critical. You're not trying to learn, you just look for something to complain about and say, why didn't you do this and why didn't you do that? Instead of asking why I didn't do this and why I didn't do that, reason with yourself and reflect on the things I've pointed out in the chart as it was happening. Because that's the things I'm drawing your attention to. The things you're going to ask me about why you do this, why you do that, has no bearing on why I'm looking at price the way I am. So, because I didn't talk about it means I'm not interested in it. If I'm not interested in it, I didn't use the logic that you're trying to ferret out of something that had no bearing or basis as to why I think price is going to behave the way it did. I can't change the chart. I mean, you watch me paint it live, and we're still live here. There's not some cherry picked out after the fact Photoshop thing. I'm bringing your attention to the things that I see in price, how it should behave, how it should deliver. And over time, you'll be able to see it. Like, for instance, look at what we've been here. What we have in our chart that I'm showing you. I got disoriented with that, thinking that was a fair value gap. So, looking at this, let's take the sell side of the code off now. Looking at this, do you see a pattern? Do you see a setup? Do you see a model out of the things I've taught, which PV array speaks most clearly to you? Looking at this right here, there's been several instances where price has been called to react a specific way, and it has done so. What in this
The order block.
fractal of price action, that means this is the portion I'm showing you. That's a fractal. What in this delivery of price is your choice setup that you think is easy for you to spot, that makes sense to you? Not all of you are going to agree with everything I have here, but it's in the chart. I was watching this just like you are live. I don't have yesterday's
The fair value gap with the volume imbalance too.
I'm doing this right now with a 1 minute chart in front of all of you. What is in this chart that I annotated? What is it in here that is your model or closest to your model? Is it the fair value gap here? Is it the volume imbalance? Is it the inversion fair value gap here? Which we were looking for it to do what? Sell off, and then the trade idea was no good because it did this candle close outside of the range. So we talked about how we can mitigate the loss, make it smaller. I took you into NASDAQ, and I showed you, okay, we use the six sister approach where we can now mitigate that actual loss that would have been realized by collapsing the trade because it was outside the entry. So that would have been mitigation of loss. And then we have this extended forward. If it was failing to go into a short here, what does it provide for us? Inversion. So it trades away, comes back down in, and does what? Offers support. Then it starts to gravitate higher. I mentioned that, okay, this puppy wanted to go to 41.19, 41.1950, that daily volume imbalance. So our mindset shifted to looking for all the PV arrays that would support price going where we're seeing it reach to. So which one in here is meaningful to you? This is the part where mentorship is individual. It's uniquely your moment to decide what you're going to do in price, because not every one of you are going to agree with everything I've mapped out here, real time, in the market. Just used it as a stair step. Took this candle close outside of the range, so we talked about how we can mitigate the loss, make it smaller. I took you into NASDAQ, and I showed you, okay, we use the six sister approach where we can now mitigate that actual loss that would have been realized by collapsing the trade because it was outside the entry. So that would have been mitigation of loss. And then we have this extended forward. If it was failing to go into a short here, what does it provide for us? Inversion. So it trades away, comes back down in, and does what? Offers support. Then it starts to gravitate higher. I mentioned that, okay, this puppy wanted to go to 41.19, 41.1950, that daily volume imbalance. So our mindset shifted to looking for all the PV arrays that would support price going where we're seeing it reach to. So which one in here is meaningful to you? This is the part where mentorship is individual. It's uniquely your moment to decide what you're going to do in price, because not every one of you are going to agree with everything I've mapped out here, real time, in the market. Just used it as a stair step. Each thing was being respected. Each thing was being delivered to and from. You're not going to agree on all of it. You're going to see certain things in here that some other students watching would say, I'm not interested in that. Or I would have traded this order block if it would have traded down to that, and because it didn't, I missed the move. Okay, that's fine. There's nothing wrong with that. But the question was, using what I've outlined here, what would be the thing that you would gravitate to? Or where does your attention gravitate to using what I've outlined here? Is it something that you've seen repeat in your own observations, and now you've watched it live be referred to in price delivery, and now you've seen it pan out? That encouragement that it comes from, you've seen it doing it, watching it, submitting to tape reading where you're not pushing a button, and you have all the upside advantages of not having any risk to worry about. You don't have to be worrying about whether you're right or wrong. You're learning how to read what price is doing. And over time, because you're able to do this, and you're bored by it, that's the goal. You want to be bored. You know what it's likely to do. You don't really care if it works. You don't really care if it doesn't work. You're just going to stick to the rules because this is what you're supposed to be doing. That's the exercise. This is the regimen that you have to put yourself through for months. And once you submit to it long enough, you'll be able to see these things like I'm painting for you live and watching how price delivers from them, gravitating towards a logical level of liquidity or inefficiency. I remember when I was first learning how to do this, and I was starting to just get the early stages of seeing some of these PDA rays. Not all of them, they didn't come all at one time. Each one of them came at a different stage and time. But I remember how it felt for me where I could see them forming, and the excitement of knowing that I've seen this before, and I can't wait to see it deliver like I expect. And I would get so euphoric. It'd be like a euphoric feeling come over me, because I could see it, like for instance, just the movement from this volume balance here, from here, just to run above this high here. In the bond market, that was enough for a trade. $31.25 per tick. If you get 10 ticks, that's over $300. That was more than I was earning at my job all week. Yeah. So when I started seeing these PDA rays and expecting them to deliver as I would expect, there's your daily volume balance to trade to there. It was a very monumental experience for me, because I was always fearful that there was no way I was going to learn how to do this, because it felt so complicated. It felt so out of reach. In every book, in every course, in everything I paid money didn't do anything but add more things for me to sift through. And it was frustrating, because I knew that I could beat this shit. I knew I could do it. I just got to stop looking at the stuff that was keeping me distracted from what's really going on. And when I moved indicators, I said, that's it. All these indicators, all these settings, what combination of indicators and what moving averages and all this other BS. When I said, I'm stopping all that. I need to know what price is doing. And that way, if I'm only looking at each individual bar, which was open, high, low, and close, not candlestick, because when I was younger, I looked at it not as a candlestick. So it tore my eyes up, straining it, looking at just a wick with a dash to the left and a dash to the right. No bodies.
That's crazy.
And when I got to the point where I could see one PD array, and it became a recurring thing. Every day I'd go in, I'd look for it. I would look for it. I would look for it. Now, mind you, it was in hindsight, because I had to have a work jerk, the job. I drove a truck, and all my attention was focused on, I can't wait to go home and see what it's done, because I had a quote track in my hand that literally was just giving me the data. There's your 41.1950, and let's pop above it. Come on, dig up in there. There we go. So you want to screenshot that, and that is 9 handles, 10 handles. And well, it's kind of like what you're experiencing here today. For some of you, I'm quite certain that this was a waste of time. I know. You want to have something to be critical about. You want to see a button being pushed. You want to see, can I really trade? Can I do this and can I do that? If you're listening to me, I'm telling you what the price is going to do when it shouldn't do it. If you think I can't trade and be able to do this still, you just want signals. And I don't care what you think about me. You want to be able to copy me. Because if I wasn't able to do this, if I was unable to do it, if I wasn't accurate enough to see these things forming real time, you wouldn't be wasting your time watching me. You wouldn't be here. If this was not something that was repeating, that you could see that it was forming real time and it was gravitating to where I'm drawing your attention to, you wouldn't even be watching my videos, but you keep coming back. So the people that say, I want to see you do this and I want to see you do that, my retort is this: I want to see you debunk what I'm doing, because this is all in front of all of you live. It's on a live stream. I have it on the lowest latency. That means it's as fast as YouTube can get it from my screen to yours. That's what you're seeing. It's real time. It's not delayed. I'm staying on one chart and I'm toggling inside this chart. I'm not showing another monitor. There's no extra laptops being utilized and cherry picking this and cherry picking that. You can learn from me. And all I'm asking you to do is put some time into it. I promise you, you will improve. You won't have all these tug of war scenarios in your head about what is it you're doing? What am I waiting for? Deer in headlights scenario. I literally have sat back and watched my son do everything wrong this week. He reset his account, I think, 4 times already. 4 times. Because he's trying to do something that is against what I'm teaching you right here. He thinks he's going to do something different, which doesn't make any damn sense to me. But human nature being what it is, I have paid students that try to do that stuff. And I don't understand it. I don't understand. If I'm sitting here explaining to you what it's likely to do, showing you where to focus, and then it's reacting off of that. The only thing that's different is when you see that it's trading down to that level and you anticipate a reaction going in a different direction, you push a button to buy it. Like, that's a hard thing to do. It's not hard. That's not hard. What I'm doing here is hard. Because I could be wrong in front of all of you. And if I was a fraud, I wouldn't be able to do this. I wouldn't be able to be this consistent all the time, real time, every day. If the logic wasn't there, you wouldn't see these things panning out like this. If the market wasn't algorithmic, it wouldn't be doing these things, reacting exactly where I said it should react. Look at those volume imbalances. You don't see that in books. You don't see them now. They are, because they took my stuff from mentorship and put it in Amazon books. But all that stuff's after. Their ISBN number and their date of print is after my mentorship. 2016, 2017. That's when I put it in public hands. Behind paywall, but now it's in everybody's hands on the YouTube channel. You can see where all of your mentor really learned from. But can't do. It's easy to talk about what it is that I've already put out there, and you can be an echo. But you're not teaching. You're repeating what I said. And you're trying to change things to make it something unique to you. And you have no idea what the algorithm does. You're still busy trying to call it wake off. And it's not. So I'm not sure what you got from today, but I believe that if I were in your position, and I was learning how to do this, and I was a fledgling student of price action, I'd be looking for half of the daily volume balance. So you would get a range from high to low. 50% of that is consequent encroachment, because volume balance is inefficiency. So it's consequent encroachment when it's not an order block. And then we're going to see if it goes straight up to here. Okay, and then if it does that, 41.25. And then, what's the other range? 41.30 and a half. You want to have that noted? That would be the only other objective I think that could happen today. But we've moved a lot this week. I mean, we've really moved a lot. And I think that trying to chase it up at these levels would be not the smartest thing in the world. So, but again, that's what I was saying in closing. I believe that what I covered today is paramount in a new trader or student of price actions development. I taught you how to anticipate difficult market conditions, still navigating it, how to utilize other markets to support the idea or negate an idea. I talked about how pushing yourself into a trade environment that you know, based on what I'm teaching, is it's low probability, which was that short earlier in the day, back here. Okay, I indicated it was low probability. Listen to the recording, don't have selective hearing, block it out, and try to come at it with an unrealistic critical stance. I framed it with the logic that it was low probability. And I said the hypothetical stop would be here. Now watch. As soon as that candle closed outside of that fair value gap, that was the first indication. And then this candle opened and went above this candle's high right here. This candle's high right there. As soon as it did that, done. Close the trade. Get out of it. So I taught you how to abort a trade. Why? When? What does it look like? You can use this with the 2022 model, because that's what you're doing in trading fair value gap. I told you that it didn't really take out this low here. Yourself into a trade environment that you know, based on what I'm teaching, is it's low probability.
Low key, I was lacking there.
So, but again, that's what I was saying in closing. I believe that what I covered today is paramount in a new trader or student of price actions development. I taught you how to anticipate difficult market conditions, still navigating it, how to utilize other markets to support the idea or negate an idea. I talked about how pushing yourself into a trade environment that you know, based on what I'm teaching, is it's low probability, which was that short earlier in the day, back here. Okay, I indicated it was low probability. Listen to the recording, don't have selective hearing, block it out, and try to come at it with an unrealistic critical stance. I framed it with the logic that it was low probability. And I said the hypothetical stop would be here. Now watch. As soon as that candle closed outside of that fair value gap, that was the first indication. And then this candle opened and went above this candle's high right here. This candle's high right there. As soon as it did that, done. Close the trade. Get out of it. So I taught you how to abort a trade. Why? When? What does it look like? You can use this with the 2022 model, because that's what you're doing in trading fair value gap. I told you that it didn't really take out this low here. This is high probability, high risk, low probability condition. And I was only leaning on what Forex has already done, and the dollar was indicating. By itself is not enough. They all have to agree. They have to be in alignment. That's a market that's symmetrical. So all things are agreeing. That's okay. We're going to close it. And I told you that when I was 20, when I saw these types of things here, my first indication would be to what? React to the price. And how did I react as a 20-year-old to the price? Open my stop up to a larger stop. Look at what it's done. No matter where I would move my stop, or if I removed the stop, which I did as a 20-year-old, I would be suffering through all this, and then finally I had to puke my guts up because I couldn't hold on to a trade anymore. I've done that. If you don't learn this, you'll do this too. And it's avoidable. You have to have a rule-based idea. What's the protocol? What's the process that keeps you from doing that type of stuff? That's what you learned today. So thinking about the 2022 model, where it's a shift in market structure, you get into a fair value gap. How do you know ICT? How do you know if the trade's going to be good or if it's going to turn against you? I taught you that today. That's mentoring. I did it over live data, real time. Do I need to push a button to teach that logic? No. The logic was explained to you, real time. If I put a trade on, you're worrying about the numbers of how much I'm making or losing. Versus, is the logic really there? If it's not, you'll know. If this stuff doesn't pan out, if I don't know what I'm talking about, I'll look like a fool out here. And every time I'm out here, it's dancing to my drum. That stop was protected. The small loss was mitigated by taking us back over to NASDAQ and use the sister approach. That means when the market's starting, let's go here now real quick. Okay, the losing trade idea that was hypothetically discussed here at the 10:50 time window. Let's go to NASDAQ real quick. I appreciate you guys that are hanging out with me still. That means that you're probably going to be the ones that succeed. The ones that get like the ghost and say, I'm going to join with this, go somewhere else. They're never going to make it. So the idea was we would look for this down close candle inside that range. And I remember I said while we were here, before this range expanded on this candle, I said hypothetically we would use the opening price here, that would be filled. And I said we'll get in the worst case scenario and use this candle's high, which was 184 and a half. Looking for a run above this here. So you could get your handles to mitigate the losses you took, or I would have taken, and that would put me at square one plus some. So now I have a little bit of cushion. Then I can go back to my market of choice, which is leading what? ES. Go back to ES. And our focus became all this. So it allows me to realign myself with a market that I now know it's likely to go up into this area where we've traded to. It wasn't both sides of the marketplace where I was unsure. You heard it. But when I was expecting certain things, go back and listen. Go back and listen and look at what I'm annotating on the chart. I'm taking your attention to very specific things, waiting for it to react this predefined rule-based idea. If we're above it and we're trading down into it, what am I saying? I want to see it support it. It shouldn't go beyond that. Look at this candle's opening price. That's this one up here, okay? Upper left-hand corner. That O. Look at the opening price. I'm sorry, the closing price rather. It's this one. Okay, that right there. What's that closing price? 4110.75. What's the low of this candle right here? That's this one. That's figure right here. Okay. What's the low of that candle? I'm not what I can on the. Yeah, there we go. The low is 4111. So it at that closing price, 4110.75, it was one tick above that, but didn't violate the volume balance at all. Reacted, traded higher. This was the other PD array. I said here's a fair value gap, volume balance, and a mean threshold of the order block. That's my 3 PD arrays. So those 3 PD arrays needed to do what? Go back and watch the time when I was watching those candles print. Price needs to be supported by that. We don't want to see a closing body below that because that would be a breach of 3 PD arrays, and order flow would be shifting, no longer bullish for the near term. Did it do it? No. Market rallied above a short-term high. Here, runs above it, comes back down into the fair value gap. You can be a buyer in there, but not if we're this close to our target. You have to manage the trade. So that's the understanding of when do you take trades versus watching price in an open position. I'm using the PD array matrix. When we're really rich in a premium in a long order flow that's bullish, you're not trying to add more to the pyramid. You don't want to do that because you're already high up in that PD array matrix where it could retrace back to equilibrium, and you don't want to be in that. That's the reason why I don't pyramid or add additional entry points once I get past equilibrium of the anticipated range. Meaning, let me show you what I mean by that. So we were looking for 4119.5. That was that March 6th high. Okay, and for the purposes of your learning here, I hope you guys appreciate this. Middle, center, March. That's not working, is it? Right. There we go. So that's the March 6, 2023 high, that level, at 4119.5. Down here, I extended this forward. We saw that it did not offer a shorting opportunity. So if it negates that idea, what does it become? An inversion fair value gap. So that means once it leaves, it comes back down in, you're looking to see if price is going to support it going higher. Or it supports price to go higher. It does. It starts to trade higher. So from here, that's the inception. Looking for it to go up here. Your fib on that low to the objective that you think is where it's going to go to, which is that 4119.5. This range, that's an implied dealing range. It has not yet materialized. Your analysis is implying that if this move occurs, if it delivers that move up there, at certain points within that range, there should be some measure of new reaccumulation. Meaning, here's 75% of it, here's 50 and 25. So the first quarter of the range between this low and that high is here. So we have an expansion there. So nothing really starts outside of what we've already seen here. Then it runs, and then we have 50%. Isn't it interesting that we saw all the consolidation, which is exactly what's in my core content lessons. Look at grading price swings. That's what I'm doing here. I'm doing this, but I don't have the luxury of time to do all this explanation while these 1-minute candles are painting. So I annotate certain things, knowing that I can come back and fill in and amplify your learning with all the things that I already taught you in conjectured lessons that were in hindsight never work in real time. No, with real logic that's in those lessons that I keep using constantly in front of you. If the logic is flawed, this stuff wouldn't work. If I'm a fraud, I couldn't do it in front of you, and I'm doing it live. Everybody asked for this forever. I didn't want to do it. No, I'm doing it. You got until the second week of November. If you waste the opportunity, it's on you. You wasted it. But the consolidation happens in equilibrium, which is this 50% level. Look how much it spent time around here, accumulating what? New longs that you have to manage as part of your open position that starts down here, or maybe you did it on this volume bounce down here, but we watched live too. Depends on where your entry would have been. You're going into this so that we can record it and take these moments and add pseudo experience for your journaling. But the logic is the consolidation is midway between where you think it's going to go to. That's the target. So it consolidates at that 50% level. That's equilibrium and where it will consolidate. So you can anticipate longer periods of time distortion. Ooh, what's that? Where the market just continuously moves sideways, and every little PD array that would otherwise be utilized in other times, like when the run is occurring, you have to take away some of these candles. Okay, take some of these candles away and just ignore them because every one of these candles are inside of the range from this high to that low. So we don't need to see all of them. What's the defining range high and low? This high, that low, and that high. What is the PD array that should support price? Fair value gap. The bodies are supporting it. Did it close below it? No. Did any other body close below the low end of that fair value gap? No. So what is it suggesting? It's accumulating what? New longs. So it's allowing smart money to accumulate their long positions in here, and then we wait for the market to trade higher, displace. That means a short-term high taken out. That's also qualifying and confirming that order flow is bullish. You don't need a DOM. You don't need book maps. You don't need heat maps. You don't need any kind of indicator stuff. Something else to look at. Volume bounce I noted, and then when we gapped with this open price here, I said this is another volume bounce. Watch that one. And then we open here, I said now we want to see price support this. And then it's in the video, folks. Go back and listen to it. It'll be there, I promise. Then it rallies and accumulates more. Then we have a volume balance right in here. Look at the bodies. Look at the body. Extend forward. Look at the bodies. It's referring to that imbalance right there. So you're looking at, oh, this is that classic support resistance stuff. It goes much deeper than that. It's not supply and demand, and it's not support and resistance. It's algorithmic price delivery. These little gaps, these little volume imbalances, you need to be aware of them because they can be your entry or they can be your target for partials or terminus. Whatever you feel that is your model, it's one little piece in that cog that's your model or that trading plan that you're in the process of developing for yourself that you uniquely trust and follow. It doesn't matter if anybody else agrees with it. It's what makes sense to you. And then at the final 1/4% up here, the order block I outlined, in my mind when I'm watching price, I'm thinking we're about the upper 1/4%. So that means it's going to be the biggest, quickest sudden move in this area. It's not likely to do what? Take sell stops. You don't want to anticipate in the upper portion a move dropping down to take sell side. It's not going to do that because it's going to be in a hurry to get to the liquidity that would otherwise be pulled from the market. If it retraced, traders might be short, might be thinking, okay, I'm just going to get out there because it might come back and get my stop. That allows them to pull their stop loss for partials or terminus. Whatever you feel that is your model, it's one little piece in that cog that's your model or that trading plan that you're in the process of developing for yourself that you uniquely trust and follow. It doesn't matter if anybody else agrees with it. It's what makes sense to you. And at the final 1/4% up here, the order block I outlined, in my mind, when I'm watching price, I'm thinking, we're about the upper 1/4%. So that means it's going to be the biggest, quickest, sudden move in this area. It's not likely to do what? Take sell stops. You don't want to anticipate in the upper portion a move dropping down to take sell side. It's not going to do that because it's going to be in a hurry to get to the liquidity that would otherwise be pulled from the market. If it retraced, traders that might be short might be thinking, okay, I'm just going to get out there because it might come back and get my stop. That allows them to pull their stop loss above that March 6 high. They don't want to do that. So the algorithm is coded to allow for no deep retracements at the 25%, upper 25% mark. And you're seeing that run into the order block that doesn't go outside the order block body at all, or candle. It went down into it, yes, accumulated more, and then straight shot right up into March 6th high. Find that in books. You won't. But you can have all kinds of amplifications of this in mind. When my books hit the market, you're gonna see all kinds of shit that you never thought you saw ever before. It's precise, the logic behind it, all that stuff. And I'm doing you the best service in the world by proving it right here in front of you. This stuff works. It's scientific. It's technical science, baby. We do it like nobody else, and nobody else can come close. And I don't care who you talk about, who you mention, they're not going to come close to this. And this is the easy stuff. We have all kinds of stuff coming later in the year that's extremely precise. And I can't wait to share it. Can't wait to show it to your live charts. And I can't wait to see your excitement, the feedback, and the, well, shock and awe. Look at the body there. Look, see how it reacted off that volume balance low? See that right there? It opened there and immediately rejects. Where's sell side at? Below here and here. And a larger pool of liquidity resting right below here, which is also what? The old equilibrium of that implied dealing range. The dealing range that's implied is basically what you're trying to target. Everything that everybody else says, you can't try to predict the market. They say, your job is not to predict the market, it's to react to price. Did you see any reaction to here? And a larger pool of liquidity resting right below here, which is also what? The old equilibrium of that implied dealing range. The dealing range that's implied is basically what you're trying to target. Everything that everybody else says, you can't try to predict the market. They say, your job is not to predict the market, it's to react to price. Did you see any reaction to price by me today? No. Except for, this is when we react and save a stop loss. But that wasn't an entry. That wasn't a mechanism that put you into a trade. It's for you to preserve capital, which is the first and foremost rule in this industry. Preserve capital. That's your number one job. If you don't do that, folks, your broker's not going to do it for you. Your spouse ain't going to do it for you. Your best buddy, he can't do it. I might be in your head. You might think I'm in the room with you sometimes, looking over your shoulder because I'll say something you're doing as a tweet. But I promise you, I can't reach your keyboard. I can't go into your phone. I can't execute for you. I can't manage your stop. You have to preserve capital. You have to keep risk in check. If you don't do that, you'll be a victim to yourself. And if you're weak-minded, and I have weak-minded students, trust me, both paid students and unpaid in free public community. Some of them are so weak-minded when they make their own errors, they love to be able to say it's my fault. That's a character flaw. You need to correct that. Do better. Because I'm out here proving this. I'm removing all of your excuses. I'm removing all the doubts whether this stuff is real or if it's rebranded anything else. And I'm literally sitting with you as if we were here live together in the same room. I can't make this chart be delivered to you faster than it is. You're seeing it as quick as it can get to you. I have the lowest latency setting on YouTube. So whatever delay there is, that's the lowest I can create for you. And I'm talking about things before they happen anyway. So it doesn't make a difference. There's no argument here. You can't make an argument against this. Not in cold water, no. You can say you don't like me. You can say, oh, but you didn't do a live trade. Okay, I can do that. But you're not learning from that. What you're trying to do is copy. I know. My paid students want that. And I denied them. And they paid me. So if I was ever going to do it, I was obligated to them. But when they signed up, they knew that there was no signal service. They knew it was all price action. They knew it was taught through the medium of a demo account. And when they failed, and some did, they have to own that. Because it's not because I didn't call the market beforehand for weeks, years, and months. Because I did, it's all logged, it's recorded, it's documented. I got the receipts for all that. They failed themselves. They quit. They didn't follow the rules. They didn't listen to the logic. They faded me. They did everything wrong as a student. Just like the student that goes to that Jade Master in the beginning. They think they know how to be taught. They know how to be trained. Teach me what I want to know. When you don't know what you need to know. So how are you going to go to somebody that knows what they're doing and demand they teach you what you think you should know? If you think you know what you should be doing and knowing, then you don't need to be trained. You already know. So you're trying to be the teacher. And that's why he sends them home. You're not in the right state of mind to learn. And I've let people say stupid stuff about me for a long, long, long time. Last year, I said it's time to start showing what they don't know. And I'm bringing people. I have a gentleman I'm going to put an interview up tonight. I was going to do 2 interviews this week so that way I could be caught up and have them scheduled just to post to my channel during next week. But I don't want to do anything. Like, I don't want to contribute to any of this stuff during Passover. I want to completely stay away from all that. I want to honor it and basically abstain from all that. But I have a lot of other individuals that want to be interviewed. They brought their receipts about what they've done with real money. But I have one that's going to go up tonight on the YouTube channel. I don't know what time it's going to be, but it'll be on there, I'm sure, before midnight my local time. So get to it whenever you get to it. But I have people
that have used what I've been teaching and are making real money. I've never promised that you are going to be successful with real money. I guaranteed that you would read price better than anybody else could teach you, and you would know what price is going to do more times than not. That's not trading. That is a skill set that you have to be prepared to take on when you feel that you're ready to do so. And that can only happen when you're bored by being able to do things like this. When you can anticipate, not react to the price. When you anticipate how it should behave. That's mastery of yourself, because you're not just going in there reacting to price and chasing and buying and selling because it's moving around and you think it's going to move 10 more handles, but it's already moved 18. I did that. I did stuff just like that because I didn't know what I was looking for. And it took a lot of time, a lot of energy, and a lot of prayer to get to where I'm at, where I can see these things. It didn't happen overnight. It was very, very hard. Nobody encouraged me. Well, at least in the flesh they didn't. And I didn't have this resource that you have. And I many times think to myself how if I could be a time traveler to go back and talk to myself, I talk to myself through these videos to you. I'm trying to, in my mind, bridge the gap of my ignorance as a young man who I really wanted to be like a Larry Williams. I wanted to be that. But I really didn't understand what he was. I just built him up as a hero in my head, like some of you do with me, and that's wrong. I'm not a hero. I'm not somebody to try to mimic and copy. I'm just a conduit. I'm just simply lending something to you to improve who you are. How you're going to build with this information is up to you. But I want to see you succeed. I'm dying to see your success. I can't wait. To me, I celebrate it. But some of you are just rushing it, not realizing that you trying to rush it makes it longer. And it denies me the satisfaction of knowing that you found success. I know that many of you are doing by trying to rush to a funded account before you're ready, trying to rush to trade with real money or trade with underfunding. That means trying to trade with too little. You need to have money. You need to have a little bit of skin in the race, okay? Because you can't do it with a $100 account. I'm sorry. You can't do it with a $500 account. I'm sorry. You have to be properly funded. And that means it might be a little bit longer for you. But I promise you this. You learn how to do what I'm showing you here. Prove that you have these analytical skills. You don't have to push any buttons. Let me run a scenario for you. Let's just say hypothetically that you are not allowed to trade. And we'll just leave it up for your own speculations. But let's just say you yourself are not allowed to trade. But you have a good friend that says, hey, you tell me what's going to happen right next to me while it's happening, and I'll just do what I need to do with an account. And then at the end of the month, I'll grease your palm. Now, this is all hypothetical. This is all just, chit chat. I'm not saying any of this ever happened or likely to ever happen with any of you, but you might not have any money. You might be in a situation where you have someone in your life that's trying to take something from you and you can't live a certain way. So you work out an arrangement. On the outward, you just look like anybody else. But you have this skill set that allows you to do something that the average person can't. And you have met someone, it may be a close friend, or you've built a good business connection, a partnership, if you will. If I show you this, you do that, I get something as a gift. And you figure out what I mean by that. Read between the lines. And you can acquire what it is that you're lacking right now. And then you can go into whatever you want to do. Read between the lines what I just said. You don't need money right now. You need the skill set. Because I promise you, if I said, I put all points bulletin on all my social media, I said, okay, I am willing to make all this real time daily and literally point to when it's the buy, when it's the sell, when it's the stop loss, when it's the target, where's the partials. If I was to make myself available to do that, I promise you, in the hour, I would have millions of dollars laid in my lap. I would have firms reaching out to me because they already have. They see what I'm doing, and they know that nobody in their house does anything like this. They recognize it. I turn away so many partnerships and business arrangements, teaching clinics and circuits. I get asked all the time. I'm not interested in that. I'm interested in your success. I want you to supply to me for the rest of my days a wonderful testimonial email that I can read and share with my family that I have been such a blessing to you, such an encouragement to you. And I want to have that moment where I get welled up in my eyes and I appreciate that you spent time and told me you did this thing and you were successful and you endured. Because I was there. I went through it just like you are. And damn it, when it happens, it feels so good. It feels like you arrived, you have a sense of purpose, and you're encouraged for your future. Whereas right now, a lot of you probably aren't encouraged. You see this stuff and it feels hard. I know. But I'm showing you. You have to show up. And you have to put the work in. You can't shortchange it. There's no shortcuts. There's no fast track. You got to go through it like this. And once you have that skill, it's like riding a bike. You don't lose it. You might not be able to do the BMX tricks like I did when I was 13 and 16 years old. I wouldn't even try to do that now. Fall off that damn thing, break a hip. But this skill set, once you know it, there's a lot of people out there wanting to connect with people that can do this. And money is the easiest thing to get hold of. The skill is the hardest thing to obtain. And some of you are rushing through this to try to get to the money. And that part is easy. You may not be funded enough right now. You may not have the capital to be able to do it right now. Focus on the skill. There's so many opportunities for you to be paired up with someone that does have the money. And that arrangement can be public or it can be private. It's your business. I'm not going to judge you. I know what I had to do when I was doing some shit that I shouldn't have to deal with. But you can't even imagine the life that's possible with just a little bit of effort knowing this. When you watch these candles paint like this, to someone that doesn't know what we're doing, what the pursuit of even learning this skill set would yield, it seems like nonsense. Like, what's the point of this? But see, you know what you're doing. You're trying to build another income. So you know your needs. You have something that's, well, anchored in a need. You need to be able to do this. You can't imagine not doing it now. And you've subscribed to the idea that I'm going to put myself through this and I'm going to learn. And that's awesome. That's great. But there's going to be days where you're going to feel like you want to quit. And you got to lean on your journal. All the instances where you said, this is what I expected to see, and it panned out. That's your encouragement. Because some of you might be watching videos or listening to the Twitter spaces that I do that I don't think I'm going to be doing anymore of. At least not live. One of the things I'm going to be doing next week is I'm going to be in a lot of prayer because I don't like how I talk. When I hear the recordings that other people share snippets of, I don't like that in me. And I wish I could do away with it. And I've been praying for it to just stop. But I can't. Sometimes I just can't do it. It's shameful sometimes how I talk when I go off the rails. It's not because I want to sound funny. It might be funny. It might be entertaining, but it's something I wish I didn't do. And that's the part of me that I wish I didn't let out. Because you all know me as the boring, monotone guy talking in the videos that are pre-recorded. But not realizing there's probably 15 different times where I'm going off. And I have to take that away. So that way you can focus on the things that matter most. The boring stuff. Not be entertained or being distracted or turned off. That's something I might say with language that really isn't something I'm proud of. I'm not proud of it. So next week I'm going to be in a lot of prayer and asking for more control. I do it all the time, but I'm really trying to pour myself into that next week. And that's what I'll be doing. So I don't want to be looking at anything on social media. I don't want to look at charts. I don't want to look at videos. I'm not talking to anybody, not students, none of them. No emails. Nothing. My family and I will be away and just taking my time away from this stuff. And hopefully, when I come back the following week, I'll be recharged. I'll have a new spring in my step. And maybe the markets will be loosened up a little bit too. And we'll have new experiences to share with each other and new learning. One of the best things you can do for me is pray for me. It's very hard for me to wrestle with bipolarism. It's very hard for me to sometimes articulate what I want you to know, and the imbalances I feel chemically, it makes it difficult. And when I don't have a filter, I'm not the best mentor. I fall victim to the imbalance at that moment until it burns off. Nothing can pull it back in. And that makes me a weak mentor. That's a flaw in me that I wish I could take away. And I can't. So I get it when there's people that don't like me. I understand. There's parts of me I don't like about myself. But you can't say these things don't work. You can't say that I don't know how to use them. And you can't say that I can't call this stuff before it happens. My privacy has watched me for years do this stuff. And I was never obligated to do this for you.
Risk on and
I've never had any obligation at all to do this. And I saw everybody out here creating their mentorships and not crediting the things I had to endure to get to where I'm understanding all this stuff. It's ignorant. It's like the people that dress up like soldiers and Marines and such. It's stolen valor. You didn't go through the stuff that I had to go through doing this. So I'm going to share all of your stuff out there for free and expose you as the fraud that you are. You knew it and copied my stuff and endured no hardship at all. Maybe people came to the mentorship or found it in the Telegram channels that were being circulated. So now you can go right to my YouTube channel, right from the source, and get it right there from the tap. And you can come here and see it being used for real, understanding why it's going to do it. They can't do that. They don't even know anything more except for what I've already said. And I have so much more to talk about every one of those PD arrays. It's offensive to see everybody out there chasing a dollar and clout and image. When if they just would have put the time and effort into it and say, you know what, I learned how to do this from this man. I appreciate him, and just ran with that. I wouldn't have a problem with that, because a lot of people doing that. I don't have a problem with that. But you robbed me of the opportunity for me to give honor and glory to God, because that's where it came from. And if you're an atheist and that offends you, hit the road, I don't care. You have me at a click. To encourage you, to teach you, I had nothing. My own uncle, who got me interested initially, became adversarial to me when I started finding success with it. So who could I lean on? Nobody. So I sat there and I prayed and wept and prayed and wept. Let my relationships and my family connections dissolve. My health deteriorate. Almost burn a hole in the lining of my stomach from just constant acid because I couldn't eat or drink because everything was worrying about the fluctuations of these candles that were not candles then but just open high and closed bars. And I had every hope and fear on every tick. While working, not having a chart in front of me, panicking because I'm inside of a destination fixing a soda machine or a coffee machine, and it's taking longer than I hoped. And I know that I gotta see what the price of soybeans are doing right now because if not, I'm gonna lose my ass. And you wanna take my stuff and rebrand it, you piece of shit. You don't deserve it. I'm here for the people that wanna learn genuinely and give me the courtesy to say, you know what, you didn't have to do this. I'm thankful you did. That's what I'm talking to. That's my audience. I know there's a whole lot of fucking scribes out there writing down everything I'm going to say, and they're trying to put it into Amazon book before I get mine up there, but your shit's going to be incomplete. Trust me. So anyway, I had to toss that in there because I had to get one more twisted knife before I hopefully come back better, stronger, faster. But anyway, whether you observe, pass over or not, try to rest next week. It ain't gonna hurt you to take some time away from the marketplace. Rest. Don't look at some charts. Don't worry about watching my videos. You don't need to contribute to ad revenue for me. Just sit back and enjoy your family, the weather changing. Just relax. Do something apart from trading. And then when we come back, each one of us will be in a prepared state of mind to receive, to learn, and fellowship. And I'll have some more lectures and things to teach you on the 11th. We'll be in a live session again on April 11th. It'll be a morning session again, so until I'll talk to you then. Be safe.
When do you think he's dropping those books? I'm copying them for sure. All right, I'll probably finish up these notes. Ooh, I do want to watch this.
The first episode of the 2022 free ICT YouTube mentorship. Little tongue twister there. So we're looking at the hourly chart on the dollar index. Why are we here? Why are we looking at this? Well, I'm looking at this because I want to show you the relationships between a risk on and risk off market. If you've been following along in the comment section, and if you haven't paid attention or even noticed, all my videos in this mentorship, the comment section is open. Okay, so you're welcome to make your appreciation known. You're welcome to, prompt me with specific questions that you want to see me kind of like touch on without making too much of a long.
All right, and then I might watch that one. my daily chart's off. Hookie's levels, the 50%, the 25%, the 75%. Pretty nice. This is the volume imbalance that we No, it wasn't. It was this one. Which is the volume balance is just a new day opening gap. New day opening gap. New day opening gap. Bro, I mess with this music so much better than jazz. I like this music a lot better than jazz. See, we have no market structure shift. No market structure shift. Even though absolute lunch slow gets taken here. Big displacement. A 5-minute imbalance. Look at the volume imbalance of a 5-minute. Let's see how well that holds. Then displacement. That's all I'm gonna note for that day. There's nothing in the charts that I like. It's about to be that 1:30 p.m. session, so we're about to transition into a PM session. We could see a little retracement here, but like that's honestly expected in my opinion. We've just had big displacement lower. I don't think there's any reason to chase this type of move. back to that level. Yeah, we've had a shift in market structure there. That could be a 2022. I wouldn't. That's not what I expect though. looks to sold though. We came up to that level here. We saw buy side shift in market structure, fair value gap. That's what I was talking about. So it looks like I just want to see, like, from here, where's 30 points? Okay. Alright. Yeah, I'm finna head out. It's a nice little stream. 6 hours. Let's watch this possibly delivered. We have that volume imbalance right there. Fair value gap in, fair value gap out signature. That's the breaker too. Alright, yeah, I'm finna head out. I'll be back today for a market review, and hopefully y'all have a good rest of your day.